77th floor.
We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the roll-up.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show.
Kevin Warsh is my homie. Kevin Warsh is my boy. Kevin Warsh, we thank you for your contributions to the Turnaround Tuesday that we knew what was coming. We knew Turnaround Tuesday was coming. Good morning. Greetings from sunny beach in Bulgaria. Christian, good to see ya. New type. Let's go, boys. People were spooked yesterday, emotional, a little too bearish. New type, you were the one getting on Robbie for being too bearish. Trade with emotions, but don't be an emotional trader. I held the line. We're up. We're up. We really just love to see Zcash at 550 today, flying. Hype's back up towards 65 and needed that. Lighter at 2.6, needed that. Wow. As always, guys, we are live here from the Tokenization Tower, the Nest, the financial capital of the world in the Empire State Building, powered by our friends at Plume. Visit plume.org to learn more about their on-chain infrastructure and asset management product, guys. We have a green Turnaround Tuesday. As expected, the summer bounce continues. Aerodrome, Lighter, Near, Zcash, really big runs. Do you guys remember last week when I told you guys about Derive? Do you guys remember when I said Derive had some stuff coming? Well, they're up 31% today. Huge green candle, about 50% from where I said. I hope you guys got into Derive. They are doing really good numbers on the option side. We've got a great show for you guys today. Welcome to the tower. Robbie's going to join us as well. We do have our first guest here as well. He is Hanson Birringer of Hyperdash. We've got Maple's co-founder and Arcus, the Robinhood chain DEX. I don't know if you guys are in Cash Cat, but that thing is flying as well. Let's see, where's Cash Cat at? Cash Cat. Yep, 170 million for Cash Cat. Can't believe I didn't buy that thing. When at 40 million when my buddy sent me the alpha on it. So yeah, guys, we have a great show for you today. As always, it's going to be a exciting, informational, and fun show. Again, it's Turnaround Tuesday. I mean, how can you be upset? What is there to be upset about? Hype looks ready to break out higher. Everything looks good. As always, our topics are powered by our friends at Trezor. Use code ROLLUP10 at Trezor.io to get yourself 10% off a Trezor hardware device for this next bull run. You're going to want to have those coins secure. Let's move into markets, weather, and more. Before we do, let me tell you about Frax, our stablecoin partner, building infrastructure for the future of digital money. Open, stable, borderless. For more information, start using the future of digital money today. Visit frax.com. Ladies and gentlemen, it is 85 degrees in New York City. Sunny, beautiful day out here in the city. Don't have much for you guys here. Got a new hat, the new Denari hat. As you guys know, one of the sponsors of the show, powered by our friends at Denari. Let's tell you about Denari after Relay. Use relay.link for all of your cross-chain needs. Let's get into the markets. I know that's what you guys want to hear about. Let me tell you about Denari. U.S. tokenized equities on chain. Visit denari.com to learn more about the best way to trade SpaceX on Hyperliquid and other assets on chain. One-to-one full ownership in a U.S. brokerage account. Let's get into the markets, guys. I know that's what you want to hear about.
Yo.
And our lovely darling child,
We here.
Ethereum.
Wow, look at those
Wow.
knees on Andy.
Our lovely darling child, Ethereum.
Was I being told that I was too bearish? In
Yeah.
fact, what I recall is that we were we were getting called out for being too bullish. And we were getting called out because we said that there was outperformance, there was relative strength. You have hyperliquid, you have near. And if you look at what's happening today, these things are an incredible upswing. And the rising tide lifts all boats. We also said that the outperformance was going to continue. We said that we were on this transitionary phase into the pre-bull, and we were transitioning out of the bear. And it was hey, when do you want to build a position? When do you want to build a position? I think you want to be in for the pre-bull phase. So it makes sense to start building positions now. And we started to do that even over the last couple of weeks because these were the outperformance that, we saw it happened. There was times, and we believe that the winners over the last few weeks, the lighters, the hyperliquids, the nears, the Zcashes.
Zcash is flying.
Absolutely
554. Chris Berniski is just slamming it. Nah, you were spooked yesterday.
I was spooked yesterday.
That's
guys,
what he
you
says.
gotta watch the show. Watch the show, guys. Come on. Pick out the nuances here. We're not, and I'm also, is this the bottom? I'm not going to be ready to just call bottom. I mean, things look pretty good today. Good reactions to the CPI numbers. But, you guys have been watching the show. New type, you've been watching the show for a long time. Have we not been long on hype? Have we not been long on Zcash, long on Arrow, long on near? Guys, we've been in position for weeks. And now the market is coming around to us and our positions.
Yeah. All right. Well, welcome to the show, buddy. Good to have you. Equities kind of mixed. Oil's still back up a little higher. And we'll see what happens to crude. NASDAQ up 1.5%. All of a sudden goes from it's all over to we're going back up to new all-time highs.
I think the war is becoming less meaningful.
Yes.
I think
totally agree.
Inflation is becoming more meaningful. That's obviously what the market is reacting to today. We had some healthy CPI numbers. Warsh is still taking this hawkish stance, but I think even, his hawkishness it loses its bite when you do get positive inflation numbers. So
he did say that the inflation numbers are not the end state for him. He's like, this is not the end game for us. QM. That's why I'm telling Andy to get a portfolio tracker and have it displayed on stream. That would be good. That's a good idea.
That would be very cool. I think today's a day where you want to check in on the N7 index.
Yeah.
Which is the Neo Finance rendition of the Mag 7. I think you're probably looking at, near, hype, Arrow. You're looking at lighter. And there's a couple other ones, Derive, you can put into that bucket. Derive's got real revenue. There's others you can put into that bucket. Chainlink, obviously, real revenue, actually starting to accrue value to token holders.
Yep. Look at this. Ethereum outperformance today.
Yeah.
Near back above $2. Chainlink back above $8. You just love to see these things, really.
Yeah. Near above 2, Chainlink above 8. Again, I'm not ready to call the bottom, but we've been we've been establishing positions at these levels.
Warsh sounded amazing in front of Congress today. Let's go. Yeah, I agree. He's just sounded strong. He's just not giving any forward guidance. He's just basically saying I'm not going to tell you guys what I'm going to do. But I think if you look at the prediction markets for the rate hike or for rate hikes coming soon, they pretty much got entirely taken all the way down to, I think, less than 20% chances or something like that. So, yeah, I think we're looking good there.
I think so too. Looking good.
As always, our markets are powered by our friends at Zama. Visit zama.org to learn more about the confidential transfers and their new confidential vault on Morpho. Deposit USDC privately, earn yield on chain, one of the first of its kind. Bitcoin, E, Solana, Chainlink, Near, all look great. Let's get into the news. Before we do, let me tell you about Near and Near.com, your home for building, discovering, and using apps on chain. One account, no borders, your financial life on chain. Visit Near.com to learn more. And here we are. It is a lovely, lovely day. Jeff went on a podcast for the first time in a while, talking to the African Exchange Valor about their new partnership of Valor using Hyperliquid underneath. And he's talking about kind of this underpinning of Hyperliquid as the liquidity layer for Valor, similar to AWS. Let's watch the clip, because I think this is a new way to think about the perps market. And I think it's separate from the way that people are thinking about it now. Because it's not just go...
The same thing that AWS did for computers and servers and I guess now GPUs and things like that, Hyperliquid can do for liquidity, ledgers, deployments, tokenizations of RWAs.
In your own words, what is Hyperliquid and what have you guys built as labs and then the broader community?
So our tagline is infrastructure to house all of finance. I really do feel like today I want to hone in on the infrastructure bit just because it's so topical for Valor's kind of historic integration. Hyperliquid really is, I think people view it as an exchange, and I think that is an aspect to it. Certainly like people probably use it through an interface, and that interface to them feels like has many exchange-like properties that they're kind of probably came from some other exchange, and now they maybe use Hyperliquid, a specific interface Hyperliquid, because they feel like it's a better product. But really, when you ask what Hyperliquid itself is, it is more than whatever specific interface or application a user is viewing. It really is liquidity infrastructure. So in the same way that I like to use this analogy of AWS, it's not perfect, but it has many features that it kind of immediately paints a vivid picture in people's minds. Many startups before AWS were reinventing the wheel. They were acquiring their own server racks, managing their own power bills, like swapping out computers as they broke, and just really like building the same thing over and over again and struggling with it. And I think when AWS came around and said, we'll handle that, like that's hard and not customer facing, and frankly, just like not that interesting to most people who want to build some like a product, just like let us do that. But we'll just focus on this one thing, do it the best for everyone in the world so that we have like 99 point, I don't know how many nines of uptime they have. The world's a better place for it. I think they've created a ton of value. They kind of like allow this startup boom where a team of like a one product person and one engineer can go to a hackathon and build something end to end and like serve it to users. I think like that was a huge unlock. And I really feel like that's the vision of Hyperliquid. The same thing that AWS did for computers and servers and I guess now GPUs and things like that, Hyperliquid can do for liquidity, ledgers, deployments, tokenizations of RWAs, et cetera. It's the kind of financial analog to that. So it's a liquidity layer on which anyone can build. There's an additional benefit here, which AWS does not have, which is why I think it's not a perfect analogy, which is that liquidity begets liquidity. And there is a kind of compounding effect where although there are disparate integrations, when Valor plugs into Hyperliquid and let's say someone like Phantom, for example, they were analogously to Valor, they were the kind of first in a category of consumer wallet plugging in. And this was last year. And these plug into the same liquidity. And I think when flow kind of hits the same markets, all the customers benefit from tighter spreads and thicker liquidity. Like you said, Hyperliquid has the most liquid Bitcoin per books, just full stop, as you know, last I checked. So I think it's very beautiful. And I think as that scales, I think it will really benefit everyone using it.
Yeah, I mean, I think it's the way to think about Hype and any of the other kind of perps markets is that these things are not, due to builder codes, these things are not just going to be go to the platform and trade. You can go onto there's a variety of different mobile apps. Obviously, there's all these front ends from MetaMask to Phantom to Valor to, eventually some of the largest platforms in the world potentially plugging into this kind of underpinning of this 24/7 permissionless global liquidity layer. And so I think that the way to think about the value prop of Hyperliquid is not in the sense that it's just a perps DEX that you can trade on. It is a set of liquidity that is available for anyone with a consumer front end. And when you think about how that scales, you think about what are the apps that can use their consumer network and customer list and plug into this. And it's just massive. I mean, there's so many different trading applications from interactive brokers to TradingView to Revolut to all the large ones in the world that trade or that offer perps. You could argue that Kalshi would have been better off instead of launching their own perps. They should have just plugged into to Hyperliquid. But of course, they have to do it in a KYC'd regulated fashion, so they couldn't have done that. And so that continues to be the hurdle for this liquidity layer. It's like, what good is this massive amount of liquidity in this, elegantly designed trading platform if people in the US can't use it? And that is going to continue to be the headwind for Hyperliquid and for perps in general.
I think that's one of the headwinds. I think, you've also got the moat that was Hyperliquid's. is seemingly started to deteriorate. The builder codes are doing incredibly well, but I think there was a perception around the expectation of liquidity growth in Hyperliquid because of the network effects, and liquidity begets liquidity. You would think that liquidity would compound and it would continue to increase in market share.
Yeah.
The lighter partnership with Robinhood has signaled that moat isn't as deep and strong as once thought. And I think we have to look at the rise of lighter, the rise of some of these perps platforms as, it on the face of it, yes, because you want to serve your customers the best experience.
Yes.
You want to offer them the best price. You just integrate Hyperliquid, but people just aren't happy with just giving Hyperliquid monopoly power, pricing power over the entire liquid trading world. Like, this is a massive, massive industry. People weren't ready to just hand that over to Hyperliquid. So it's still early. There are going to be new competitors from the incumbent institutional TradFi world, as well as from the crypto native world. And they're going to fight for this. And I think we may have seen, what happens when there are new entrants, major partnerships that start to eat into that liquidity.
Yep.
And the compounding effect of liquidity begetting liquidity starts to just, not that it's still increasing, but it's decelerating. And I think that's something to watch.
Bullish on Derive Shine says, yes, hope you got in. Bullish Gito, now that JTX has launched. We're building one world market for all markets. Let's go. And we're ready to build an institutional for. Let's go. Guys, we are closer to ever to the end of this bear market. And I've got Hanson Birringer here in the tokenization tower. He is the co-founder of Hyperdash. They just acquired a ton of interesting infrastructure in the Hyperliquid ecosystem. It is a 24/7 brokerage platform trading crypto stocks, oil, and FX. He also leads Hyper Holdings Global, a consortium bridging together traditional finance and the Hyperliquid ecosystem. He also anchored Grayscale's live HYPG staking ETF. They have over $1 billion in Hype staked as well. I'm going to get him set up in the tower, pass you over to Rob. There's a bunch of Robinhood chain stuff that we need to go over first. And guys, I'll be right back with that. And Rob's going to take you through the Robinhood chain economics.
Yeah, so we're going to head over and see what our boy Lorenzo has to say. So Lorenzo is a research analyst in digital assets for ARK Invest. That is Kathy Wood's investment firm. Billions of dollars of assets in liquid funds and venture. And Lorenzo has been absolutely crushing it. He's a great follow. And he does these long form posts, really going into depth. He has access to really cool data visualizations and insights. And so here he's talking about the Robinhood chain as the cleanest case study of what has happened to ETH's economics. And he walks through the revenue model here. And he says, since inception, this is from a few days ago, but since inception, Robinhood chain had generated about $816,000 in revenue. Arbitrum obviously is effectively the middleware or infrastructure provider, the gateway between Robinhood and Ethereum. Robinhood is sharing, and it feels like it's Robinhood's to share because they're kind of generating. Arbitrum takes 10% of that, so about 80K of the 816, and then Arbitrum pays Ethereum about $1,800, less than $2,000. And the margin profile roughly equates to Robinhood 89%, Arbitrum 10%, Ethereum 15 basis points. If your thesis is ETH is money, Robinhood building is ultra bullish, more activity, more ETH collateral, more lendiness. And we have heard and seen how deeply integrated ETH is into the Robinhood platform. It is the collateral asset and the denomination and the base asset for several pairs on the Robinhood platform. However, if your thesis is that ETH is a revenue generating asset, and then you see that they're only generating $1,800 from this massive integration with Robinhood generating, upwards of $1 million. That's the ultra bear case, right? Because they're taking such a low margin on this high revenue generation event. And so the uncomfortable truth is that Robinhood was never going to build on Solana Sui or any monolithic L1. They need the customization. They want ownership over their stack. And Ethereum is really the only place to get that. They won this deal. Robinhood integrated them on merit. It's just the pricing is not right. Lorenzo sort of puts his 2 cents out there and says that the healthy split is more like 75% to Robinhood, Arbitrum 10%, Ethereum 15%. And if you compare that with the top line, what's actually happening, Arbitrum still gets their 10%, right? So that feels fair. It's just that Robinhood is sharing quite a bit more, about 14.85% more with Ethereum, because Ethereum is the most valuable settlement layer in crypto. So things need to change. And he tags ETH Labs, which is a strategic choice because this is the entity that's responsible for research and development and really prioritizing the monetization strategy of Ethereum. The issue that I have with this, and I think Lorenzo does a great job laying this out, and I think the pricing model makes sense theoretically, but once you start to put this into practice, it's not even like they would lose Robinhood as a customer, because they're not going to go to Sui, they're not going to go to Solana, they're not going to go to another L1. And so if they were to raise prices for, settlement, they would retain Robinhood as a customer. That's not the issue. The issue is that they've just made such a stride and such a significant point about lowering prices, lowering cost of transactions, lowering data availability, and overall lowering the cost of settlement in order to facilitate more transactions per second, that it just feels philosophically misaligned for them to go arbitrarily raise prices. So while I think Lorenzo is correct, I think the pricing model that he lays out is more fair. I don't see a path for Ethereum to move in a direction of higher prices, even though I think it would be a more fair pricing model, and I think it would be beneficial for Ethereum. I think Robinhood would still get what they need. They wouldn't end up paying that much more net, and Arbitrum still, makes their nut as a middleware provider. I don't see how Ethereum could go about doing this. Although I do think it would be the right thing to do, you'd really need to get creative as far as how you would articulate the change in pricing models to their customers in order for this to ultimately take effect. That's what I see as the issue here. I ultimately love this analysis and I love the destination, but how do we get there? What is the path to increase prices? I think that is what needs careful consideration. Guys, Andy is going to be chatting very, very soon with the Hyperliquid team. We've got one more tweet to go through before we kick it into the tower. We're going to hear from, let's see, what do we have here going on in the AMM world? So much bad data. Let's go ahead and kick it over from Alex Cutler of Aerodrome. So much bad data and hyperbole in CT over the past week. So I vibe coded a Dune Dash reality check. Alex and Uniswap have gone back and forth about what data is correct. It's incredible to me about how much dispute there could be over the metrics. We're on a blockchain. Effectively, all of this data is public. Why is there so much dispute and controversy over, what LP fees, how much revenue, these sorts of things, how much volume and activity? And this is in particular with respect to, Uniswap and Robinhood and how much activity they're generating there. And then on Base, what the split is between Aerodrome and Uniswap. Alex vibe coded a dashboard reality check. EVM DEX volume dominance by chain and exchange is virtually unchanged week over week when filtering spam. So Alex is claiming that a lot of volume on Uniswap is spam. He says, be wary of anyone trying to convince you otherwise, because Uniswap is displaying what they say is real volume and generating real LP fees. I don't really understand what to attribute this spam volume to. There have been a bunch of fake tokens that are out there on Robinhood chain as well as on Base. I think these are just AI generated tokens, and people are saying this is real volume. So it feels very strange to call that real volume if it's just wash trading. I don't know if it's wash trading. I think it's real transactions. There's a lot of nuance here, but this is real data. Alex vibe coded it, pulled it from the exchange. We're going to continue to monitor this. This debate is going to continue to heat up as Aerodrome comes into mainnet. Then I think we're really going to see apples to apples. Aerodrome is sort of winning on Base. Uniswap is sort of winning on Robinhood because Aerodrome isn't on Robinhood. And so, how much are they winning? Well, that's sort of where the debate and the controversy is, because it's not really clear what data is real. Once this data ends up on mainnet, it's apples to apples. You'll have two protocols. They'll be battling for the same order flow. And ultimately, we're going to see who wins. Where will the aggregators point their flow? And what is the activity going to look like on mainnet with real assets in production? Guys, we're going to kick it over to the tower. Let's do a quick break, quick standby. Let's play the animation. Andy's going to be coming at you guys with a Hyperliquid ecosystem project. Guys, tune in. Don't go anywhere. Be right back.
If you're serious about crypto, this is where you need to be. The Rollup will be broadcasting live from the Rare Evo Expo floor on day 1. It's July 29th and 30th at the Aria Resort and Casino in Las Vegas. General admission is free, so don't miss out. Hear from U.S. Senator Bernie Moreno, Stephen Gregory from Binance US, Brian Quintens from Kalshi, and Maggie Parsons from Lighter. Connect with industry leaders from Bitwise, Wintermute, Privy, and dozens more. Claim your free ticket today at rareevo.io. We'll see you in Las Vegas.
We get deep. We get deep. We get deep. Hot. You know we get deep.
Alrighty, guys, welcome back to the Tokenization Tower. We're here with Hanson Birringer, the Chief Revenue Officer and co-founder of Hyperdash, as well as a core contributor to the Hyper Holdings company and SPV, and a Hyperliquid Mega Bull early ecosystem adopter. Hanson, great to have you in the tower, man.
Thank you.
Good to see you here, buddy.
Likewise.
And how you doing today, man? How's the month been?
It's been a great month. We've had a ton of really exciting announcements. Me kind of coming out, joining Hyperdash full time officially. Yesterday, we just announced our acquisition of Imperator. So we're kind of now launching our whole data and node infrastructure validator business. We're really looking forward to the Hyperliquid Summit, which we're sponsoring later this week. And really exciting time to be building within the Hyperliquid ecosystem.
Yeah, man, most definitely. I feel like the thesis around Hyperliquid has evolved so much over the last couple of years, just with the evolution of the product as well as the state of tokenization and trading. Maybe just give us, what is your kind of current Hyperliquid thesis when you're going out to raise money for this SPV for the Grayscale ETF? You're speaking to high net worth institutional allocators. What is the thesis that has really resonated with them and that you've kind of compiled into the state of things as they are now?
Yeah, it's one of my favorite topics. I think we could talk about, why Hyperliquid is important for not just the crypto capital markets, but the larger kind of traditional finance, market that's evolving kind of together. But I think at its core, the real reason why investors and, researchers, traders, and just kind of market participants get really excited about what Hyperliquid is building and want to be a part of it is a couple core reasons. I think one, It's open source, permissionless, decentralized. It really has the same rules for every participant on the platform. And it also takes that crypto ethos and pairs it with really high performant financial systems and applications where you can actually have institutional capital participating in this decentralized world, which we haven't really seen before. In my 10 years of crypto, it's really been the only thing that's kind of kept those two worlds really growing together instead of separately.
Yeah, I mean, I think that convergence is it's the core thematic of where we're at in the industry. And I think, we talk about it as perps, tokenization, stablecoins, and like these three kind of mega trends. And, we've been talking a lot about how do we best express the bullishness of these trends? Like, what is the best way for our community, for us to kind of be able to put our capital on the line and express a bullish view on these three mega trends? And we keep coming back here to Hyperliquid. In the lens of these three, how do you think about Hyperliquid as a way to express the bullish trend for perps, tokenization, and stablecoins? How do you kind of think about the combination of these three, decade-long mega trends? These are all set to grow exponentially. Is Hyperliquid a good expression for these three?
I think absolutely. I think it's the purest expression of that. With perps, you obviously have the obvious answer. Hypercore is the leading kind of perp dex. It's rivaling centralized exchange. From a market share of OI and volume perspective. On a liquidity perspective, it's already one of the top, if not second best or third best markets for some of these pairs. And a category leader in listing new types of assets. Right, we saw the introduction of HIP3 introduce RWA perps, right? So you're kind of combining two of these larger trends into one really great product. And Hyperliquid today is a de facto category leader as far as crypto exchanges go for trading those sort of commodities and equity perps. And what they did is really not outsource, but kind of open source that builder aspect, right? Which is a core to the Hyperliquid ethos, is let other high quality, competent builders come in and start adding to this value add of the ecosystem. TradeXOZ has done a fantastic job of deploying these perps and continuing to list new assets that traders want to trade around the world. As far as stablecoins go, we obviously saw the latest news with USDC now becoming a kind of a aligned quote asset V2. Kind of a mouthful, but with that, I don't think the market really appreciates how big of a move that was for. Since its inception, these stablecoins have never done a deal like this. They voluntarily are giving up 90% of their revenue just to be a part of the Hyperliquid story. And I think that's really important for people to really digest and understand, not just from a narrative perspective, but also from a revenue perspective. There's now almost 10 billion or so, give or take a couple billion, given the volumes and things happening on the exchange. But there's now about 10 billion or so stablecoin supply on Hyperliquid, HyperEVM, Hypercore combined, and 90% of that, call it earning 4% NIM on the back end in their T-bills. 90% of that goes to the assistance fund, which is buying back Hype, programmatically on chain. This is adding hundreds of millions of dollars of buying pressure to the protocol, in addition to obviously the trading fees. So to kind of, I guess, wrap that all up to your question, right? Hype as a token and Hype as an ecosystem is truly the purest form of these three mega trends in crypto, perpetuals, RWAs, and stablecoins, all expressed and have a compounding effect as well over time together.
Yeah, and just to kind of like focus in on one of the points here with regards to kind of builder codes and how this kind of distributed nature of using the underpinning liquidity that Hyperliquid has built for, tons of different consumer applications, Phantom, MetaMask, Valor Exchange just announced their kind of partnership. And so Jeff was on their podcast talking about, this was like 5 days ago, talking about how he thinks about Hyperliquid now more as analogous to the AWS in the sense that they power GPUs, the cloud, and all this, and kind of this underpinning of all these servers that they run. Hyperliquid is essentially that for RWAs, for perps, and just for like trading as a whole. And the one difference that he made clear was that liquidity begets liquidity. Right. And so as this kind of keeps growing, you get a better scenario for all the users, right? As more and more of these venues start to launch builder codes, start to open up their front end for trading, more market makers come in, more OI builds, you get a better, tighter spreads for all the traders and users. And what we've seen is that this is going to continue to grow through more and more of these front ends. But what we're not yet seeing and what we're not able to see, and for example, Kalshi launched their own perp offering. What would have been fantastic is if Kalshi was just able to plug into builder codes directly instead of having to, because I mean, their OI right now is very low across all their pairs. It's not really comparable, but they need to do everything KYC'd. They need to do everything by the CFTC rulebook. And so Hyperliquid's kind of facing a bit of a headwind here when it comes to these more regulated consumer front ends, Revolut, Robinhood, eToro, Kalshi, Polymarket, et cetera, who are kind of operating in a more regulated format. And so what we saw Lighter do with Robinhood was actually launch a completely different instance of their platform on Robinhood chain.
Right.
It's obviously very low in liquidity as well now. It's quite new. But when it comes to this like kind of regulatory headwind for builder codes for HIP3 to really get out there and be able to be traded with all these consumer front ends in the US, how do you think about what that path might be? Is it just let's get this single instance of Hyperliquid through the rule book, through the CFTC? I think the group down in DC just made a big push. How do you think about this evolving as a regulatory headwind?
Yeah, it's a good question.
Yeah, it was a mouthful.
Yeah, no, it's a good question. I think it's a topic on a lot of people's minds, a lot of investors' minds, a lot of traders' minds too. I think the easiest way that I think about it is, one, the world's very big, right? There are a lot of different regulators in a lot of different countries with their own rules, and how do you approach financial markets within their jurisdiction? Hyperliquid as a L1 protocol is an open source permissionless system for anyone to participate in. And so I think I obviously can't speak on behalf of their team, but I think they're approaching this in a as good manner as they can, given what type of software they're operating. And I think you mentioned, right, the Hyperliquid Policy Center, and I believe Phantom code sponsored a comment recently to the CFTC, kind of trying to push for decentralized venues to also qualify for this kind of new regulatory clarity here in the US. Obviously, if that happens, it would be a massive tailwind for Hyperliquid to now be an option for a regulated broker front end to execute their orders through the Hyperliquid back end, which is really ties into this thesis that Jeff and the team have set out from the beginning of being this liquidity layer and this AWS layer. And as you mentioned, right, that every time someone new plugs in, whether it's MetaMask, Phantom, Hyperdash, Valor, 10 other people, everyone else in the world, every other user benefits from that added liquidity and added, kind of taker or maker, volume being driven through the platform. And so I guess the way that I see the specific maybe headwinds that are facing Hyperliquid right now is like any other DeFi protocol. It's going to be hard to have the kind of legacy incumbents just accept you as is. But what we're really seeing is Hyperliquid making a proactive effort, right, not reactive, which I think is very important, of helping drive policy here in the US. The US is a very large market as far as capital goes, and with the Hyperliquid Policy Center, I think Jeff a couple months ago was in DC speaking to these regulators. I see it as only positive steps in the right direction, and hopefully that the US groups can have the right conversations where they need to with the right people and really steer this policy in the right way.
Yeah. I mean, I think that's what we can ask for, and I think, clearly we've seen the incumbents starting to fight back. I think the CFTC or the CME went to sue the CFTC over some of these rulings. So clearly, there's
a lot of money at stake, right? There's trading globally is hundreds of billions of revenue a year for the taking, annually, right? It's a lot of market share, wallet share up for grabs. A lot of these companies have been building for decades in this space. They're going to want to protect their piece of that pie. And we saw a lot of innovation and disruption happening in the traditional brokerage space in the last couple of decades, most notably with Robinhood, right? Zero commission. That kind of disrupted a whole lot of other companies' entire business models. You can look back, I believe it was E-Trade and a couple other ones had to basically announce that same day that they were now also offering zero trade commissions, and their stock dropped 20% the next day because it hit them, hundreds of millions of revenue each quarter that they no longer could get. So we're kind of seeing a very similar, I would say, shift happen in financial markets globally, with Hyperliquid now offering really cheap, competitive, with also really great liquidity for some of these brokers just to plug into, versus maybe going the more traditional route that they had to before. Yeah, most definitely. I mean, I think that's one way to look at the kind of
the bigger picture, but I think the kind of battle right now is still against Binance, OKX, Bybit, and really just like capturing that crypto market share. And what's kind of funny is that a lot of these centralized exchanges have actually been late to the party of listing like RWAs and gold and stocks and things, and they've just started really to list these things in the previous months. As of late, I think yesterday it was announced that the total OI for HIP3 markets hit about 3.6 billion, new all-time high. Also, there's a significant share of the revenue that's coming from these markets. We're obviously in a crypto bear market. Just kind of getting into kind of the revenue story here. When you think about the priority fees that have just recently launched, as well as the Coinbase and USDC and Circle revenue hitting, I think it's August 26th is when it starts, or late August, and I think it's going to be
October 3rd or something.
Paid out October 3rd,
right before the Hyperliquid event in Token in Singapore.
Yes, exactly. and then every month it'll be paid out basically, and so you've got this kind of additional revenue hitting, in addition to a somewhat depressed crypto revenue year, but an elevated stock and RWA revenue year. I think if you follow the 4-year cycle, you attribute that we're probably in kind of the lowest of the lows here, maybe one more downfall for crypto, but we're kind of getting to the end here. The question is just kind of understanding what the forward-looking revenue story here is for Hyperliquid. From where it comes from, and how you anticipate the percentages of these revenue sources to kind of come together, and just B, what that growth story may look like in the next year, 2 years.
Yeah. I mean, I think the most obvious forward-looking projection of revenues for me is going to be vastly dwarfed by HIP3 RWA perps. I think that market is just enormous. I don't think that people in crypto can truly grasp. If you haven't worked in that field, I worked in TradFi before I came into crypto. If you haven't actually experienced like just that world, you don't really know what you don't know. And that's not like a dig on anyone. It's just like it is such a big market. Our brains can't even comprehend it. To give into perspective, some of the options notional volume, right? It's in the quadrillions. It's an enormous number. Some of these ETFs trade trillions a day notional. Obviously, there's a lot of leverage involved in options, but there is also a lot of leverage involved in perps. And so, if you start to think about capturing just a tiny fraction of global trading volume expressed via perps, which are an amazing financial instrument, and Hyperliquid is, I think, an amazing representation and venue to trade those. This revenue should 100x over the next decade. And when you start to then factor in if the liquidity is 100xing in volume, and trading volume or trading OI is 100xing, that also probably means that collateral and margin on the exchange is 100xing or more. And then now we have this AQAV2 with USDC, and so I think right now 5 to 10 billion of margin right now. Imagine if that went to 50 billion or 100 billion, and that's now billions a year of added buying pressure to the protocol, in addition to all the trading fees. And so I think when you start to really zoom out a bit, but then looking forward, the numbers get quite large of what the market that Hyperliquid is going after. And that's also a lot of the reason why our company chooses to build on top of Hyperliquid. We've been one of the first builders since the 2024, using builder codes, empowering our users to get access to this great liquidity, giving them additional tools, advanced algos, private TWAPs, things like that, which are not available on the front end. And then pairing that with more like data to help improve their trading, and just like give them more content to do research and make better decisions. And so we're all in on Hyperliquid for a lot of reasons, but most importantly, we're very much, kind of starting to really think deeper about what are we actually, kind of building towards as a participant in the ecosystem, but also as someone who's just plugging into the technology to then go build a much larger company, kind of, accessing the global world of finance, not just crypto.
Yeah. So let's talk about that then. So let's start with the Hyper Holdings contributions to the Grayscale ETF launch. This was also a big kind of kicker in the last 3 months. We had the Circle announcement followed by the ETF launches.
Right.
And so Hyper Holdings, maybe just tell us a story. Like, how did this happen? What happened? So you launched an SPV to help fund the Grayscale ETF to get it off the ground.
Correct.
HYPG. Just give us a story here. What happened behind the scenes? How does this work? And then
So Hyper Holdings Global, we're it's a special purpose kind of fund created to for one purpose, and this is all kind of in the SEC filing. So It's all public out there, and we basically, contributed in kind to the Grayscale ETF, which today is the lowest kind of fee staking product for Hyperliquid.
Yeah.
That kind of came about for a couple of reasons. I think we saw the massive impact that the Bitcoin ETFs had 2 years ago when they launched, and just this real kind of need for investor education, is particularly on the institutional world, of why Hyperliquid is so important, kind of going back to what we were talking about earlier today. And my kind of personal relationship with Grayscale is kind of what led me to structuring that deal with them. There's a lot of reasons we chose to work with them, right? There's a couple different issuers out there, but at its bottom line, they're the largest crypto asset manager in the world. They're also one of the oldest. They have close to 20 billion of AUM across their different products. They're actively working with the regulators here in the US, the Hyperliquid Policy Center as well, to push forward the proper adoption and rules that are going to benefit Hyperliquid long term. That was a really big part for me and kind of the investors in the group of why we wanted to work with them, as well as just their track record of really pushing forward crypto adoption in the institutional world. They kind of won the battle with the SEC to get crypto ETPs approved a couple years ago, and they've just been a pioneer in the asset management space. And I think to give a little bit more context of why these seed creations are so important for these asset managers is when you have, let's say, an institutional investor wants to go buy Hype, right?
Yeah.
They don't have a Coinbase account. They can't access Hyperliquid in the US. Maybe they're onboarded to an OTC firm like Flowdesk, where I used to work, but there's a lot of friction of getting that approved. There are all the different risk controls and things. But now if they already have a brokerage account, they can just one click, right, trade the ETF and go buy it. So that's step one. Step two is the consideration of liquidity. How maybe they want to enter into a $10 million position, but the product only has 2 million of AUM, right? They can't be that much exposure of the total vehicle for just liquidity and concentration risk. And so these ETFs, it's really important for them to have diversified holder base from a AUM percentage perspective, so that net new investor can feel comfortable getting into the size that they need and being able to trade in and out of that position over time. And so that was kind of how that's, I guess, story came about to be. And then our kind of investor group, which is a combination of some of the largest hedge funds and VCs in crypto, as well as some of the largest on-chain holders of Hyperliquid around the world. We're going to be working with Grayscale as they're kind of going out to educate this traditional allocator base that they're connected to, both in the US and globally, of why they should own Hyperliquid and why they should express that view through the Grayscale Hyperliquid staking ETF.
Yeah, and I think it actually comes back to what I was saying at the top, which is that 3 mega trends.
Yeah.
And I was talking to Zach Pandel about it, head of research over there, and he's just like, look, man, like I know that it seems like Hype at 60,
it's cheap.
All you guys are up a ton, you're all in. It's like the best thing ever. But guys, these investors are thinking about this as a 5 to 10 year long tokenization, perps, stable coins. I got to have exposure to this. I can't look back at my LPs and be like, somehow we missed the 3 biggest exports of the digital assets industry.
Right.
So they don't even really, they are price sensitive, but in a certain way, they're almost insensitive, because it's like, look, we're early, it's cheap.
Right.
And so, thinking about that, there is that ETF exposure vehicle. Obviously, there's Hyperliquid Strategies and Hyperion, the two DATs. Hype Strategies had that crazy run as of late. Now it's down under MNAV. People are a bit angry about that, but I think that'll probably work itself out. And so now it's pretty clear that there are institutional access vehicles for Hyperliquid. What's next? Is it an education thing? Is it an awareness thing? Is it a marketing thing? Is it Jeff going on more podcasts? Like what is that? In a similar way that Ethereum has now broken out into there's Etherealize and this institutional Ethereum, ETH Labs. There's almost like these subsidiary nonprofit groups. What's next for Hyperliquid in the institutional adoption? I think it's pretty clear that's what's going to take this thing to 100, 200, etc. What's that process look like? How are you getting involved in that?
Yeah, I think it looks a little bit different for Hyperliquid, right? Kind of by design from the core team, right? They want to focus on what they're extremely good at, which is building this liquidity layer infrastructure for anyone to build into. Kind of mentioned Jeff in the Valor podcast. He kind of went into a little bit more detail on this, and I would recommend everyone to go listen to it. It's really great content, but we kind of all serve, right, as the Hyperliquid marketing team. It was kind of like a meme going on in the community last year. But it is true. There's obviously you and I are talking here today. We're kind of acting as that, educational guide for, the listeners who maybe don't know so much about Hyperliquid, or they're kind of finding something else new that they didn't learn before. And then that was also, kind of the second reason for the Hyper Holdings Global is to serve as a trusted, kind of person to talk to about, what is going on in this ecosystem? Why is it so important? And really, why is this so important in not just crypto lens, but the broader financial services, capital markets lens? Hyperliquid is one of the fastest growing companies in the world right now with 10 employees, 11 employees. And, not many people know about it. Obviously in crypto, everyone does, but crypto is a very small kind of part of the global economy. And so that's the most exciting part, which probably Zach was, referring to, right? We are still very early. There's a lot of education needed. A lot of these asset managers and institutional vehicles are purely focused on that, producing great content, great research, and then really going out and educating financial advisors of, hey, you should be aware of what's going on here in case any of your clients have questions. We're here to help. And we also are here to serve as a way to access this, investment idea you want to express in a regulated, compliant, very easy to access way.
Yeah. And I mean, Zach said that basically he finds it much easier to pitch Hyperliquid than other ETFs that they have because of the revenue story and the buyback story. And so I would imagine when it comes to the work that you're doing, that's also kind of like the primary lens. Like, hey, this business is doing, $1 billion a year in free cash flows. 99% goes to the token.
Right.
The token is the equity. There's no kind of split structures here. It's very, these are the 3 mega trends. Here's the business.
Right.
You can value this thing based on how you would value a stock, versus when it comes to different L1s. And even Ethereum is just kind of like, how do you value this thing?
It's more vibes based.
Right,
versus,
right.
Yeah.
But then once you get out of Bitcoin and Ethereum, the vibes based calculations, they start to kind of break down because it's like you lose the store of value or the credible neutrality story.
Yeah.
When you get to other L1s, et cetera. But so there's kind of like this gap in between the what I call it the big two, and then Hyperliquid and these revenue generating businesses, which I think is broadly a trend that it's really catching on with digital asset investors now. Is I want to own something that treats me as a first class citizen, has cash flows, gives those to the holders, and so there's kind of a standard that's been set here.
No, absolutely. Hyperliquid kind of broke the traditional model in crypto. I think for better. There was this kind of what if premium that a lot of these tokens had been ascribed value to in the past cycles of 2017, 2021, 2024. What if we built XYZ but on the blockchain, and then this thing was making $500 of revenue a month but being valued at $2 billion? That's not right. And there's a lot of obviously intricacies with supply and demand and FDV and all these different types of games that are being played in crypto. But Hyperliquid really came in as the purest expression of a growing company. It's capturing all these mega trends, and it actually provides value to token holders in the form of the buybacks, and just also you can stake the hype on the network and earn staking rewards, as well as get discounted trading fees if you're a trader. There's a lot of different ways to utilize your hype as a productive asset, while also benefiting from the value accrual of the network expanding via the token buybacks.
Yeah. Now on the Hyperdash side, you guys have processed over $35 billion of volume, so tons of trading activity. I see the UI on the production computer here every day from Matan. He's always looking at the UI, trading on it. And so when it comes to thinking about what the value prop of Hyperdash is for the traders and investors in the community, you guys just acquired Imperator, which is a institutional grade kind of data firm, as well as, from what I understand, kind of validator and staking platform.
Exactly.
So maybe just walk us through the Hyperdash business. Where are you guys making your revenue from? Obviously, trading fees. Why acquire Imperator? What is the value prop of actually using the platform? Kind of give us the high level here.
Yeah. So at a high level, Hyperdash, we're a global brokerage and trading data analytics platform. What that means kind of, very simply is you can trade through our, kind of terminal. We have advanced tools and execution that other platforms don't offer. And then we kind of pair that with this really data rich experience to help improve your trading decisions. That can look like discovering top traders to help maybe formulate your own strategy, or discovering really bad traders to know what to avoid. We also have, the ability to really track and customize what data you want surfaced, because there is so much going on in the Hyperliquid, platform. And the benefit is, it's open source. You can access every trade that's happening in real time on Hyperliquid, but it's very difficult to get that data in a clean, nicely formatted way. And that's kind of what we make, very easy for our users. As far as the Imperator acquisition, this was kind of a natural next step for us with this data, right? Or with this acquisition, we are now a top validator node. So we are in the active set, actively processing data faster than anyone else. And now we're able to service this data and clean it up and enrich our users' experience even faster and better than before. In addition, we're now able to offer, more enterprise-grade data packages to certain clients who maybe really want to better understand Hyperliquid, but they're not ready to trade yet. And so, there's a lot of conversations we're having now on that side of the business to really complement the trading, terminal for a user who, or maybe a TradFi asset manager. Hey, I really want to understand and kind of help underwrite my investment thesis into Hyperliquid. What's going on? I don't really know how to do this. Our team will help them and kind of understand and really build a custom data package to help suit their needs. And then, hopefully if they do want to trade, right, we then have that as well for them too. But we're just really able to access just a larger market with the two combined offerings. And we see that as a just kind of next step, building on our larger plan that we have to really grow Hyperliquid's accessibility and interusability or interoperability globally.
Yeah, amazing. And what are your bull and bear cases for Hyperliquid here? What are your, not necessarily prices, but what needs to go right for Hyperdash, Hyper Holdings, Hyperliquid ecosystem to be, the most bullish outcome into the next 18 months? And then what is kind of the, moderate to bear case from your perspective as we kind of come to a close here?
Yeah, I mean, I think from a bull case, it's really easy to get bullish. All the things we talked about, right? All these different kind of, mega secular trends coinciding at once, and not just coinciding, but accelerating, in the world of, AI and also like just the modern world. A lot more people on the planet are becoming connected through the internet. A lot more people are starting to use capital markets and getting access to financial markets. And, with now stable coins, it's much more accessible than ever has been in the past. A lot of the world has, always been gated from US capital markets because their local regional broker doesn't support it. We're now seeing, through the use local FX on ramp, you get USDC, you can now access Hyperliquid and basically get access to the global financial markets in a couple clicks, on your phone or something. That's never happened before in humanity's history. And so that's really bullish for onboarding the next couple billion users to accessing Hyperliquid's liquidity. And that's, something we're devoutly focused on doing and building across our different product set, not only on the desktop, but mobile and just other formats for, this next wave of traders to access global market liquidity. As far as the bear case, I would say, it's kind of hard to find one because I feel so strong on these secular trends accelerating. I would say if my thesis would start to be invalidated if I started to see those trends stopping, and not just stopping, but like kind of reversing. But at the moment I don't. So that's kind of keeping, us, grinding every day, 7 days a week, 24/7. We're a global business. Our clients are global. We're all really excited about what we're building, and it doesn't feel like work, honestly, which is also great. And that's also what made me to make the official switch, from my kind of career on the institutional side, coming from Flowdesk recently. And so, it's hard to find a reason to be bearish, but I think the
guys all in.
The reasons to be bullish are quite compelling.
Yeah, I would imagine your portfolio is very heavy and hype these days. Hanson, it's been a pleasure, man. Thanks for joining us in the tower. Hope the summit goes great. Hope the rest of your week in the city is great, and great to have you, man.
Thank you.
Thanks for being
here.
Great
to be here.
All right, guys, we'll be right back with our next guest, more markets, charts, and more. I think we've got the Maple co-founder talking on-chain credit, which kind of coincides as well with these three mega trends. And we also have someone from Robinhood Chain joining as well later. And then we're going to do markets, charts, and more. After today's CPI numbers came in quite low, the market seems to be parting a little bit. We'll take a quick break, get you back to Robbie, and get set up. Thanks, guys.
Cool.
If you're serious about crypto, this is where you need to be. The Rollup will be broadcasting live from the Rare Evo Expo floor on day one. It's July 29th and 30th at the Aria Resort and Casino in Las Vegas. General admission is free, so don't miss out. Hear from U.S. Senator Bernie Moreno, Stephen Gregory from Binance US, Brian Quintens from Kalshi, and Maggie Parsons from Lighter. Connect with industry leaders from Bitwise, Wintermute, Privy, and dozens more. Claim your free ticket today at rareevo.io. We'll see you in Las Vegas.
We get deep. We get deep. We get deep. Hot. You know we get deep. We get deep, you know we get deep. We get deep, hot. We get deep, you know we get deep.
Money, power, and money, power, and
If you're serious about crypto, this is where you need to be. The Rollup will be broadcasting live from the Rare Evo.
Alrighty, guys, welcome back to the show after the great little segment there with Hanson from Hyper Holdings. We've got Joe Flanagan, the co-founder of Maple, someone who we would consider into our return to fundamentals basket. I think these guys are highly undervalued and underlooked, so we're going to figure out what's going on behind the hood today. Joe, great to have you. Welcome back, Joe. Welcome to the show, Joe, and great to have you. I think it's your first time on, so looking forward to chatting.
Yes, great to be here. Thanks so much for having me on. You were cutting out there a little bit for me. I'm not sure if it's the same for you, Robbie.
Yeah. I think just welcoming you to the show. I think it's your first time on, if I recall correctly. We've had your partner Sid and Maple. We've chatted about for a long time, and we do have this thesis on the show around this return to fundamentals, which is effectively getting down to our roots, not doing too much financial engineering, meme coin shenanigans, but doing real credit capital formation and the building blocks of finance, if you will. But because it's your first time on the show, would love to just hear a little bit more about yourself and the story of how you ended up finding Maple.
Sure. Yeah, well, I mean, we certainly at Maple like to think that we're the adults in the room and bringing some seriousness and some fundamentals to the DeFi ecosystem overall. But to roll it back, we have been around quite a long time now. Sid and I started Maple back in Australia about 8 years ago now. And so Sid and I have been working together previously in traditional finance and specifically within structured credit. And so what we went looking for was, can we bring some automation? Can we bring some technology into the institutional credit space? And in that exploration, we then found blockchain, smart contracts, Ethereum, and so down the rabbit hole we went from there. And the reason that we're called Maple is the initial idea that we came up with and what we actually built on chain was structured credit. And so we had the debt stack. And so the reason that we're called Maple is that a debt stack does look like a stack of pancakes, and the cash flows in a debt structure roll over the pancakes like maple syrup. And so that was the initial idea in our bringing our institutional credit experience in structured finance into the on-chain ecosystem. But what we realized when we did that was there's no real assets that exist on-chain that are worth putting into that structure. And so that's where you fast forward to today, and what Maple is at its core is we are originating institutional credit on-chain and creating those assets that one day in the future will be able to be securitized and structured and have all of these things done to them. But we are now fortunate enough over those 8 years that and since we launched that we've now originated over 22 billion in loans.
Yeah, that is sizable. I think this has been happening for a long time in finance. I mean, the debt stack isn't anything revolutionary, but doing it on chain is revolutionary. And maybe you could just describe why it's important that you took this process that was happening off chain. What were some of the inefficiencies that you and Sid realized and saw firsthand? And how does bringing those on chain help?
Yes. So when you go about issuing institutional debt, there's first this 6-month process of where you are going through serious amounts of due diligence, and then you are creating hundreds of pages of legal agreements where there are all of these third parties involved to create a quote unquote trusted environment. And so you have a standby servicer, and you have a custodian, and you have a trustee, and you have a trust manager. And so all of these roles are created in order to create a trusted environment for one party to lend money and one party to borrow money. And so what we're able to create with blockchain is we're able to remove all of that, those middlemen, all of those service providers, and create a trustless environment, which is the core of the blockchain thesis. And trust doesn't mean that trust doesn't exist. Trustless means that trust doesn't need to exist. I don't need to trust you in order to interact with you, and vice versa. You don't need to trust me in order to interact with me. And that really is the core technology that Maple has built, is that all of that 22 billion that's been originated is done through smart contracts. The second important element is once you've gone through that 6-month process of issuing the debt, then you are interacting and monitoring through spreadsheets and through email. And so there's just the back and forth of inefficiency between all of those third parties and the lack of any sort of real-time information. And so that is also one of the core things that blockchain enables, is that you're able to have real-time visibility into all of the underlying data that makes up any loan portfolio. And so now you can go to the Maple website, you can see in real time what are the loans that have been issued, what is the collateral that's backing those loans, when would a liquidation occur, when would a margin call happen. And so that transparency that we've been able to bring to institutional credit is what I think will be the standard for how all on-chain finance and eventually all finance should be originated, and the standards that those participating should demand.
Yeah. Yeah, I mean, I think that we've heard about this idea that while the tokenization of assets is specifically appealing, there's a concept of origination needing to happen on-chain. And this is slightly different than the type of origination that you're speaking about with regards to loans and credit. But talk to us about why the origination on-chain for different tokenized assets is important to Maple's product stack and just generally this kind of tokenization vision. What is it that makes the origination on-chain so crucial to the kind of broader use case and value prop of these tokenized assets?
Yes, yeah, and I know you're in the tokenization tower, so this is important, but it's an important distinction is that there's many parties out there that are tokenizing assets today, and what they're really doing is just taking an off-chain legal structure and then wrapping a token around that in different formats and then putting that on chain. And then there's the promise of, okay, I'm going to create liquidity because I brought it on chain, or I'm going to create secondary markets because I brought it on chain. And what's being lost is what is the actual reason that you're bringing an asset on chain? What is the fundamental improvement that you're going to have by having that asset on chain? And so, as you're alluding to, one of the distinguishing features of Maple is that we are originating debt from the source. So the capital gets aggregated and then the loan gets issued directly through a smart contract on chain. And so this idea of direct issuance ensures that the asset exists in an on-chain structure from its very outset. And so you can imagine there's a big difference between wrapping a legal structure and tokenizing a treasury bill, and then all of the frameworks and things that are required to create a parallel between its on-chain life and its off-chain life versus the inherent nature of issuing something from an on-chain context at its very beginning. And then the difference that the life of that asset then can live and the use cases that can be brought about as a result of that initial issuance on-chain.
Yeah.
Joe, I might be getting ahead of myself here, but given the things that you've talked about with issuance and origination and making these loans, and especially how you're facilitating these on chain, correct me if I'm wrong, but it sounds like a bank. It sounds like that's effective, and I don't mean in the regulatory compliance sense. I mean in the sense that originally one of the primary pillars of this industry was banking the unbanked. Is that effectively what you guys are trying to do? Is that the mission, is create this technologically enabled smart contract ecosystem that is able to facilitate financial transactions, but entirely through code? And if so, does it make sense to pursue and sort of upgrade our financial infrastructure so that, these are the new banks, go and pursue OCC charters, especially in this regulatory regime? I guess first question is maybe philosophically, how do you think about this? And then second question is, when you start to play this out on a business corporate playbook strategy, what does that look like to ultimately bring that vision into fruition?
Yeah, so I wouldn't say that we are, attempting to be a bank, and certainly my legal advisors would tell me not to, that they would be happy with that response. But the key of what you're getting at is, and one of the core principles of why Sid and I started out, was that we wanted to ensure that access to institutional credit became much more accessible globally. And that goes in both directions. One, that the capital providers, the people supplying the capital in, can get access to these opportunities where they're able to access the yield that comes from these premium offerings that is normally reserved for the elite and for high net worth individuals. So there's definitely an element of that, of democratizing access to the highest quality yields that are available.
Yep.
And then there is, on the borrower side, all of those efficiency that I spoke about earlier, bringing that into the financial ecosystem overall. And when you bring more efficiency, less fees into a financial system, you're going to lead to a more productive use of capital. And that productive use of capital is what generates real yield and ultimately leads to the progress of humanity, innovation, and real expansion. And so I think that combination is what we're really trying to facilitate, is one, broader access to these opportunities, and then two, when you bring efficiency to capital markets, and especially to debt capital markets, that is what leads to real innovation and humanity reaching the progress and potential that we know is possible.
Yeah. I mean, I think it's just, we're just on the cusp. I just keep saying that stablecoins, perps, tokenization, these are three mega trends. We are still so early. Somehow every bear market, we get the chance to be so early. Maple token has been beaten down. Thing is a steal right now. I'm going to say it. You don't have to say it. Joe, talk to us about the revenue story, the growth story as it pertains to kind of the business side of Maple. We have a lot of investors on the stream every day. They come in and we speak to different founders, and we just keep hammering home our thesis around kind of the types of assets that we currently own. And outside of, a couple, Zcash, Bitcoin, Ethereum, maybe, the only assets that we talk about on this show that we own are things that generate a significant amount of revenue, have really strong tokenomics, and really just kind of have a really, really strong growth story ahead for the kind of trend or sector that they're operating in. Talk to us about the growth story for Maple, the TAM of the market that you're going after, and just kind of like how the business interacts with the asset of the protocol.
Yeah, so our growth story, especially when you look at things year on year, has been real expansion, and so we've been able to grow close to 100% year on year in terms of our deposit base, and then over the course of this bear market, especially the last 3 quarters, we've been able to really ensure that we maintain the quality of our loan book and the continued growth of our loan book. And so what that culminated in is at the end of last quarter, our loan book reached an all-time high. So we had a 1.9 billion in loans outstanding, which was about a 66% growth quarter on quarter. And so that shows you that Maple is now definitely being the most active institutional lender in the space, in comparison to our institutional peers like Tether and Galaxy and Coinbase, and shows that real development of the market for the ability for DeFi to start to come into real capital markets activity. If you said to me that we were going to be competing with Tether and Coinbase and Galaxy and the likes of these names a year ago or 2 years ago, and be able to outcompete them in many scenarios, I would have said you were crazy. Like, we were still a long way away from that. And so when you zoom out, you actually start to see the perspective of the amount of growth and adoption and willingness for public companies and other large borrowers to start to engage with Maple and the broader DeFi ecosystem. Go ahead, yeah.
No, please.
Oh, I was just going to touch on the revenue front. And so Maple's business is very simple, right? We aggregate capital and then we lend out money. And so the higher our loan balance is, or the loans outstanding, the more revenue that we're able to take. And so we take a net interest margin or a spread between the yield that we pass back to lenders and the amounts we charge to the borrowers. And so when you start to see that growth in our underlying loan book, you know that is then the catalyst for more revenue to flow into the protocol. The final thing I'd add to that is last week we released a new Maple improvement proposal, which is where we're going to introduce more systematic buybacks. And so it's important to note Maple there's no equity involved. We are a token only ecosystem. And so that direct attribution of now Syrup holders will know the revenues that we generate from our business activities will directly flow into a systematic buyback program that can be real transparency and knowledge around what portion of revenues go to buying back the token each month.
Very cool. I mean, you just answered my question right there before I could even ask it. And you mentioned that we're at billions of dollars in loans outstanding. What is the growth path? Like, who is the next borrower, to ultimately take some of these outstanding loans? Are you, kind of steadfast in penetrating more of the, traditional financial institutional lending market? Or are you, more so focused on expanding market share within the crypto lending space? Just talk us through, the steps to ultimately get to, 5 billion, 10 billion, and so on and so forth.
Yes, so we've done a great job during this bear market to continue to expand our market share and our loan book. That growth in our loan book is on the back of a 50% decline in Bitcoin. So when you put that into that relative basis, you can see the great job that the team has done in expanding our borrower footprint and continuing to grow our loan book. Where does this go from here? Yes, we're looking forward to the market turning around and Bitcoin prices returning, which will then bring a lot more institutional borrower demand. But what we want to continue to do beyond just crypto-backed lending is start to bring the infrastructure and our progress to date into not just crypto-backed lending, but to lending overall. And so asset-backed lending that goes beyond just crypto assets. And so if you think about it, crypto for a long period of time has been operating on its own little isolated island, and capital flows around it and between it, but it is not actually getting integrated into the overall financial system. And so I think that's where Maple really sits, is that we can be one of those bridges that's enabling what has been crypto in an isolated world, starting to bring capital into the overall financial system, but not being in a way that is isolating or excluding some of the principles that are important in traditional finance. I think sometimes we get too caught up on the principles of DeFi, and it's very important to maintain those. But there are many great things that traditional finance has done over a very long period of time. And so what we're focused on is, what are the lessons that we take from traditional finance in terms of risk management and other practices, and then incorporate that into the best elements of DeFi and crypto technology to create the best of both worlds. And that is what's going to really lead to the development of on-chain capital markets and ultimately proper institutional participation.
Yeah. And I think it makes a ton of sense. Institutional participation is essentially where the industry is headed. We're now finally starting to see interest and participation, not just outwards going into that market, but they're showing interest in coming into this market as well and embracing tokenization. And so that certainly makes a ton of sense as far as where the loan book is headed. Maybe you could also just give us a sense of, what the loan book looks like today. Obviously not doxing anyone, not, asking for specifics, but I recall seeing something about, Sky and Spark was a significant depositor of Syrup USDC. Maybe you could just, unpack, what the relationship is between, Sky and Maple, as well as, the broader loan book. What is the composition broadly and what we can expect, on things today?
Yeah. So as at today, the majority of the books are greater than 80% of our loans outstanding are Bitcoin-backed loans. And so these are institutions, so these can be exchanges, market makers, trading firms, OTC desks. Think of all of the financial institutions that exist within the crypto landscape, and they will be normally onboarded and actively borrowing from Maple. And then they are posting their Bitcoin, for the most part, some Ethereum, some Hype, as collateral, and then borrowing stablecoins, USDC, USDT, and then more recently USDG. And so that's kind of the high level construct of the portfolio today. It's highly diversified. We have well over 70 active borrowers. We have maybe close to 100 active loans at any point in time. And so that level of diversification is really important. We're not reliant on any one borrower or issuing to only one institution. On the capital supply side, and you're referencing Sky in particular, we have a number of large capital providers and different avenues for how we source capital. But Maple, for the most part, is really focused on how are we integrating into large existing capital sources and existing customer bases. So we're not too focused on building out a massive retail presence, but more importantly, accessing capital where it already exists today and providing that high quality institutional yield to those customers and those capital. Sky being a major contributor today, and then we're focused on the continued development of bringing many others into that space, including some fintech partners that we're starting with now.
Yeah.
I mean, with the context of the Bitcoin-backed loans making up a dominant portion of the balance sheet, it just, I mean, Michael Saylor, are you listening to this? Like, you want some Bitcoin yield? Like, we want to pay those dividends.
This 4-year cycle can't come any faster.
We would be thrilled if he wasn't selling Bitcoin and instead borrowing from Maple.
Yeah. Joe, how does the today we had the CPI numbers come out and they were quite low in the US in terms of inflation, and so there's a lot of conversation about whether or not the new Fed chair, Kevin Warsh, is going to lower rates, hike rates, keep rates the same. I think it's probably likely that the rates stay the same for July, and potentially looking at, as Trump's kind of got his fingers on them to lower the rates into the rest of the year, perhaps at least into next year. What does the macro environment signal to you guys? How do you adapt your risk tolerance and your kind of playbook for your product based on the macro yields, whether it's 2-year, 5-year, 10-year, or just T-bill rates? What is your kind of risk strategy, and how does that change given the evolving macro landscape? It feels like we're kind of on the tail end of the cutting cycle, if not at the end, of the hiking cycle, and looking into the cutting cycle here. What does that mean for Maple's product strategy?
Yeah, so we meet every month as an investment committee to review things, and we certainly look at the rate environment, and we actually create an internal benchmark, which is a combination of on-chain yields, so Aave and Sky, and a combination of yields that exist on-chain, and then the SOFR rates and what things are looking like in the real economy. And so what we see is that we would agree that the curve is maybe looking to steepen a little bit on the back end, maybe for is looking to flatten on the back end. And so we're not looking to issue too many longer duration loans. Like, that's kind of how we think about it. Are we looking to issue some longer paper or shorter paper? And that's really how Maple works in terms of interacting directly with the rate environment and the macro economy. In terms of the structure of our loans, because these are Bitcoin-backed loans, these are all over collateralized. We have great risk procedures in place so that we're not ever really changing our loan-to-value ratios or changing the risk perspective from that structure. The protection that's in place with Bitcoin as collateral is very secure, and the systems and everything that we have established manage that. So it's more a function of what duration profile do we want of the underlying loans, and do we want to be issuing things on a longer basis or slightly shorter basis based on that interpretation?
Yep, makes sense.
There was the doomers out there calling for the destruction of some of these larger companies, especially in the Bitcoin space, as a way to kind of mark the end of the bear season. I'm curious, again, not asking about any one particular lender or borrower, but given that you've got a vantage point of the space as a whole and sort of the healthiness, the health of the lending space, especially as it pertains to Bitcoin, given that we saw a 50% decline in the asset prices that are collateral in these loans. Just from your vantage point, did you see these companies are kind of on the brink, of some sort of, margin liquidation event? Did we get close to that? It felt like that was sort of like the end of, bear markets in the past. People are kind of calling this a bear market. I think they're looking for some sort of grandiose, capitulation event. Do you think we're going to get that this year, or this is kind of a new paradigm? These companies are well capitalized and, they've got plenty of margin to work with.
Yeah, I mean, I agree with this aspiration for a grandiose blow up to close out the bear cycle, and that's the experience that people have that have been in the crypto industry for any period of time have. It's always been that it's been an event driven blow up. And so they're not really able to grasp, okay, why has Bitcoin sold off 50%? I can't point to any one event that has led to it. And it's only like maybe if you peel back the layers of MSTR and the buy demand from ETFs and that institutional demand coming out of the market for the last 6 months, that you can start to understand it. But it isn't I can point to this headline and say this is the reason that it's happened. Now, there were a couple of very small digital asset treasury companies that were forced sellers and over the course of the last 2 months or so. And then there were big headlines around that. People trying to like maybe to make more of that news than it's actually true. If you think about the number of digital asset treasury companies who were created and the number of blowups that there have been so far, it's very few. And in the worst case scenario, they're selling a small amount of Bitcoin in order to cover their debts and to restructure their balance sheet. And so it's not really any excessive leverage that exists within the DAT space or within the Bitcoin space overall. If you look at the amount of leverage within the crypto lending ecosystem, it's at very manageable low levels in comparison to previous cycles. So I think from that structure perspective, knock on wood, I'm not expecting or seeing anything that leads to a major blow up. And really, we just need to start to have a few narrative shifts to start to bring some momentum back into Bitcoin, and maybe a little bit of a decline in the AI narrative to enable some of that rotation of capital.
I agree. Joe, thanks for spending some time with us. Congrats on the success. I know it's going to be a big bull market for you guys. Rob.
Joe, before we let you go, just to double click on the buyback mechanism that you talked about sort of at the beginning of the show. I'm just curious, do you have any numbers around that, and anything that our community, our audience can just understand as far as the significance of this? How much are you guys putting into that mechanism now, and where do you see the trajectory of that going?
Yeah, so to provide some context to our some of the decisions that we've made around this, is that companies go out of business not because they run out of ideas, but because they run out of money. And so we have been intentionally defensive over the course of the last 6 months to preserve cash and capital on the balance sheet, and to ensure that Maple is never having to raise capital in a suppressed environment ever again. We had to do that back in 2023 in order to survive, and we never want to be in that position again. And so we have been intentionally selective about the amount of buybacks over the course of the last 6 months and reduced that quite significantly. Now, we're starting to see the potential of the market rebounding over the course of the next 6 to 12 months. Maple's balance sheet is extremely strong, and so we're able to provide this guidance to the market on what revenue buybacks are going to look like moving forward. But we're still scaling that up. And so what we've said is that when revenue is between $1 million and $1.5 million per month, 10% of that will go to buying back the token. Between 1.5 million and 2 million, 20%. And then anything above 2 million in monthly revenue, 30% of that will go to revenue buybacks. That'll be in place for the next 6 months and shows the kind of exponential scaling of revenue buybacks as revenue increases. What that then looks like in 2027 as our revenue continues to grow is that larger and larger chunks of our revenue go towards that buyback. And so I think this provides real clarity to syrup holders and potential syrup holders of, our intention is to buy back as much of the token as possible, but we're not going to do that at the risk of the short-term risk of jeopardizing Maple's balance sheet overall.
Yeah, I think it's a very thoughtful approach. Last question: what did you guys do last month?
In terms of loans?
Or in terms of revenue, just to put us in the, are we in the 1 to 1.5 or 1.5 to 2 bucket?
Yeah, so we did about 1.25 million in revenue last month. And as I alluded to, the loans outstanding hit an all-time high at the end of last month. And we do have a lag effect. And so when our loans get issued, it then takes 30 days for the borrowers to make the first payment. And so that kind of maybe gives a bit of guide on the direction that revenue will be heading over the course of the next few months.
Trajectory is certainly promising. Joe, thanks so much for joining today and sharing a bit more context around Maple Finance. You guys are absolutely crushing it, and I'm excited to bring this. Let's get this loan balance to 10 billion and beyond.
Let's do it. Yeah. Appreciate all the support, guys.
Thanks, Joe. Keep it up, man.
We'll see you next time.
Cheers, guys.
Turn to fundamentals. Alrighty. Bullish. 2 very bullish conversations today. If on-chain stables get to $3 trillion, how can Maple not succeed? Yes, Greg, agreed with that. How can they not succeed if we get to $3 trillion? I don't have an answer. I think that they will. We got some breaking news here. I'm going to pull up for you guys. We need a breaking news animation.
We do. We have a breaking news stinger transition.
Can we get a breaking news animation?
Give Leo a few seconds to find that in the old OBS scenes.
Let's see if we can get OBS. I got the shared screen up. We got some breaking news here.
Let's see if we can get a breaking news stinger going.
Yeah, I don't know if he's got that in the. I believe what do they call the thing that the archer puts his arrows in?
The quiver.
In the quiver.
Pull the old
He's got the quiver.
The bow out the quiver and bam.
Is Rob wearing a Dream Tempo t-shirt, guys? Can you guys let us know what you think about Rob's attire today? And how about that ibis behind him? Let us know what you guys think about Rob's attire today. If you guys like it, we'll give him a pass. If not, our production manager Alex has some words for him after the show today. Is what I'm hearing. I'm hearing the production manager Alex has got some words for the guy. I think we need some Michael Saylor face on that mug. Let's go ahead and hit it into this.
Don't clown Andy for his pronunciation of the bird species behind me.
Ibis.
He gave it 2 tries. Oh, third time's the charm. There we go.
Let's get the breaking news stinger. Let's go, Leo. Come on, you got to get that quiver going.
Oh,
wow,
dude,
look
we
at
got
that.
the regular stinger.
Wow, that's pretty weak sauce, man. Gotta say.
The breaking news
That
stinger's in there somewhere.
inflation adjusted pay raise just not coming in handy here, is it, there, boys? Hyperliquid Policy Center and Trade XYZ met with the SEC's crypto task force to address crypto regulation. Apparently, today the crypto task force, met with representatives from Hyperliquid Policy Center. Jake Travinsky and Adam from Chainlink would be the guys. The topic discussed was approaches to addressing issues related to the regulation of crypto assets. Hyperliquid Policy Center, XYZ Ltd, and Sullivan and Cromwell LLP representatives provided the attached document, which was discussed during the meeting. And so you can find the memo here on the SEC's website. And
throw that thing in. It's only 2 pages.
Basically, what's being said here is the Hyperliquid Policy respectfully requested meeting with SEC Crypto Task Force during the week of July 13th to provide an overview of the Hyperliquid protocol, including its technology, markets, and relevant ecosystem participants. The Hyperliquid Policy Center is an independent research and advocacy organization that seeks to advance clear regulatory pathway for Americans to access on-chain markets such as those deployed on Hyperliquids. Hyperliquid Labs is a software development company contributing to the Hyperliquid protocol. XYZ is a research and product lab building on Hyperliquid, a core contributor to the XYZ protocol. Respectfully submitted Natasha Vassan, Jake Travinsky, Bradley Bork, Jeff Yan, and at Aliens Inc., XYZ Collins, and then you've got these folks from the lawyer group. And so, I mean, guys, I was just talking about that in that conversation with Hanson about the biggest, let's call it the biggest headwinds for Hyperliquid. I noted that Lighter deployed a new instance of their platform. Notably for Robinhood chain. But the issue with deploying the new instances, the issue with just fragmenting liquidity, I mean, we've seen this. And so I think the winning platform is going to have, like, the liquidity begets liquidity thesis doesn't really work unless you can do it all in one. And so you want to see that play out. Lighter, I think, is going to say differently. Variational may have their own opinion on it as well. But it looks like Hyperliquid got a little bit of a bump here on this news. The news dropped right here. I know we're looking at a 5-minute chart, but this is where the news dropped. And so obviously some market participants had some thought this was bullish. I do think this regulatory overhang being removed is definitely bullish. And, we'll see what ends up happening.
I mean, I struggle with, this U.S. regulatory overhang because wouldn't it affect perps broadly, like on-chain perps platforms broadly, like the same regulatory overhang that Hyperliquid is facing, Lighter is also facing.
They're all going to face it.
Variational and
yes.
Aster are also facing it.
Yeah.
The regulatory overhang might help the CMEs of the world, the incumbents of the world, but when it comes to the market share of these, effectively, they're all facing this at the same time. And when it comes to new growth, I think this makes a ton of sense. But at the moment, I mean, Lighter just feels like it is accelerating. And I think Hyperliquid has to maintain, the moat if they want to continue to succeed. and therefore grow into a broader US market.
How's Jito looking? We'll look at it in a sec. OI for hype back above 11 bill. Obviously, I mean, volume wise, I mean, it's honestly, this GVRT is really impressive. Almost flipping lighter in 24-hour volume. Has flipped variational. I don't know what's happening.
Then you look
there.
at look at the volume to
And
OI.
Pacifica as well, doing a ton of volume. And Rhea doing a metric ton of volume in the last 24 hours. That is a portfolio company of the Rollup. Yeah,
you're looking at volume and not open interest.
And Vest has done a little bit of volume. Another portfolio company of the Rollup. Yes, obviously open interest. Yeah, is this is denominated by open interest, not by volume. But Jupiter has a ton of TVL. So there's just like little nuts and crannies that you can find here in the perps market of like what's dominating, what's doing well, what's not doing as well. Yeah, let's look at Jito for new type. His bags are on the line, so he wants us to talk about him. Well, we'll look at that. Some consolidation here. I mean, Rob says TA doesn't work, but then we literally break from some lows and we smack right dab into the 50-week SMA and pull right back from it. So the astrological lines of the charts apparently are working, guys.
And remember, if your astrological lines don't work, you can always draw new lines. There's always another line that you can put on the chart.
What do you guys think of JTX?
So that it does work.
Have you used the platform? So I've not really used it yet. It says get early access still, but I thought that they opened it up for everyone to use. So I'm a little bit confused as to what's happening there, but it looks cool. I like it. I mean, it looks nice, but what is happening here? Why is it not open for everyone yet? A little bit confused there, to be honest. Chart looks good though. Hype looks great all of a sudden after yesterday. If we're gonna go back to our TA guys, we've got this 50 SMA. We need to close above it to kind of reclaim the short-term trend that we was respected here. Reclaim would be bullish. We'll see what happens. Lighter is just insane. I mean, we thought we were maybe gonna get a pullback down, but clearly we're gonna have to wait a little bit longer for that if it comes. I mean, guys, we were talking about Derive for a while as well. I don't know, Rob, if you had a chance to get into this. I think you were out. But I think it was this is a daily chart. So last week, some point in here, I told all the guys that I had some nice some nice tips, feedbacks on Derive. So I hope you guys got in. My Jito bags need help. Pacifica, I love. New type. Did anybody get into Derive based on what I was saying last week? Did anybody get in? The thing is that what's coming hasn't even came out yet. This is they just got listed on BitThumb. That was it. And Upbit. That's what happened here. So, I mean, this thing looks insane. Again, guys, we keep covering this. I think Rob was right. Rob was like, you guys might think I bought the top on my Zcash bag because I was buying at like 600, 700, 500, bought more, but it's really a time horizon thing. Like, I think Rob in December is going to feel really good about his Zcash entry. So
I'm pretty much at break even.
So there you go, guys. So don't hate on my boy. New type. What are you guys holding? Did you guys buy anything on that dip yesterday? Or are we just kind of hanging out? As I said, I really just am waiting. I really just want to see a reclaim here of this level, of this 50-day MA level. I'm not exactly sure what it's at right now.
What is this hype?
Yeah, I just want to see this. I mean, basically, if we close right here, if we can close above 65.5, guys, on hype today, we're going to be looking really good for a reclaim of that level. Obviously,
if I'm giving into the TA cope, isn't this like a bull flag? Like, isn't that what this is?
This whole thing?
Isn't that what that is? You get the triangle.
Yeah, and it broke down.
Pendant or whatever you want to call it.
Yeah, it broke down. So a reclaim would be exactly what you want to see on this. Again, guys, we're not even trading this stuff like on a day-to-day. You know, we hold a lot of these things and we just kind of check in on our bags once in a while. I just don't think we're gonna make money like trying to like play every little Trump rate cut noise. Like we're just gonna hold until, if our guy from yesterday is right, we've got like a couple more months. It's a bull pennant. I bought lots of Fogo and Jito. Fogo, I haven't heard that one in a while.
I mean, I'll be very transparent with, what I've got.
Yeah, let's hear your portfolio, Rob. Give us the Rob portfolio. Give us a breaking news. Rob sharing his portfolio. Go to Rob full screen. Breaking news. Robbie's sharing his portfolio. Tell us about what you got, Rob.
So, if you're curious, and remember, my time horizon is probably longer than yours, but Hyperliquid is the number one spot holding. All right. Bitcoin is the number two spot holding. Those are probably around 20 to 30% of the portfolio each. So between Hyperliquid and Bitcoin in the spot portfolio, you're looking at like 50 to 60% of the port. ETH. I mean, guys, I think ETH is going to go on a fucking generational run. All right. I think Tom Lee has taken off a ton of the supply. I think we're in a low liquidity environment. I think whenever the bottom is in, this thing is going to rally. You have Robinhood. The revenue accrual thesis isn't really the thesis. The ETH is money thesis isn't really the thesis. It's kind of both, and it's kind of neither. But the point is that the ETH Foundation has downsized. That's bullish. ETH Labs has upsized. Vitalik has embraced gambling, and it's time to blow the lid off this thing. And Tom Lee is a generational sales guy. And he's going to go on CNBC every chance he gets in a crypto bull market. And once again, ETH is going to surprise a lot of people. There was a tweet sort of in the bear market, and it was talking about the next bull market, and it was saying how ETH is the next Bitcoin. Sol is the ETH is going to perform how Bitcoin performed last cycle. Sol is going to perform how ETH performed last cycle, and so on and so forth, and named several coins. I still tend to think that's true, and I think ETH is going to do well. And it's also a major, and it kind of has, disappointed a lot of people. And so I think the most hated coins tend to rally the hardest. And so ETH is my third largest spot holding. It comes in at around, let's see, at around 18 to 19% of the portfolio. And so between Bitcoin, ETH, and Hyperliquid, really the top three there, you've got about 70% or more, 70 to 75% of the portfolio. And then in the remaining 25%, I've got a little bit further down the risk curve, and then I do have some longs open on Hyperliquid. I've got Near. You guys have heard us talking about Near. Near is our exclusive AI partner. They're a tremendous partner, and we've got Near Virtual Day coming this Thursday. I tend to practice what I preach. We talk about it. We talk to their team, and it turns out that we like the coin. We like the coin. The coin is producing revenue, and there are things that are really, really positive. Then we've got Akash. I've been talking about Akash a lot. I think it fits nicely into this AI narrative. It is a decentralized compute marketplace. I am bullish on Akash. I also had Greg on the show in San Francisco, and when he came on, I think he just talked for like 25 minutes straight and was absolutely dialed and locked in on the agentic economy, agents as a whole, the entire AI setup. One of the smartest AI guys that I have talked to. And so I went and bought his coin after that. And if you had bought when we had started talking about it, then you are doing well on Akash. I do own some Sky and Aerodrome and Maple Spot. I also own just a little bit of lighter. Probably want to add a little bit to that position. And then a couple things with some dust. But Sky, Aero, Maple, Lighter, these are all part of the return to fundamentals thesis, the revenue thesis. These Maple's got revenue. You heard Joe come on say he did 1.25 million in revenue last month. A lot of that is going to start going to buybacks. You also heard him talk about the lag effect. You guys have heard us talking about Aerodrome. When you look at, just in terms of revenue minus expenses as it pertains to the value flowing to the token, Aerodrome is doing extremely well, in one of the best, really. And then also part of this cohort is Sky. Sky has a big old balance sheet. They've got revenue. They've turned the buybacks down a little bit, but I expect those to go back up as well. So this is what my spot portfolio looks like right now. It's dominated by Hyperliquid and Bitcoin to a tune of 50 to 60%. Then I've got about 19 to 20% of my portfolio in ETH. That is takes us to about 70, 75% of the portfolio. And then Near and Akash fit well into the AI thesis. Guys, tell me what you think about this. You're probably going to be hating on my ETH position, but don't just stop there. Tell me why you love or hate the rest of my portfolio as well. And then we've got Sky, Aerodrome, and Maple and Lighter that all fit into the return to fundamentals DeFi resurgence thesis as well. And then I've got some perps. I'm long on some perps, and a lot of it is actually the same positions that I have spot, but not all of them. I'm long Zcash on perps and spot. I'm long Near on perps. Zcash is my biggest position on perps. Near is my second biggest position. Then Aerodrome, Gold, which I just totally borrowed from Citrini Research because their last article was talking positively about it. And Per is my smallest position, but still notable on the perps side. So that's where we're at. Near, Zcash, Hyperliquid, Bitcoin, then Ethereum and Gold. And going down the line from there, Akash, Sky, Aerodrome, Maple, Aerodrome, Per is the extent of what my portfolio is looking like these days. See Andy replying to you guys in the chat. Sky turned down their buyback to pad their emergency fund. Sky is printing money and trying to work with TradFi. I agree. I think Sky has been so stable for so long. And, people look at the ETH Bitcoin ratio to sort of indicate bull markets. I also think Sky, when you get Sky going, that's when it sort of signals to the rest of the market, like we're really about to have some fun. And so I'm sticking with Sky. And then you've got no CSM, GeoNet over Akash. Akash has to contend with the hyperscalers selling extra compute. It's a good point, but if we're comparing Akash to hyperscalers, we're talking, this thing with a couple $100 million of market cap and these things with trillions of dollars of market cap. I would love to see the total addressable market comparison between those.
This guy. So, no Solana.
Man, I don't want to miss Solana like I missed NFTs, but I just have trouble escaping. I mean, please tell me why I'm wrong, but I have trouble escaping like the Solana is for meme coin trenchers, like identity that I associate with Solana. Yeah. And if I'm too close-minded and I cling on to that perception, then I might miss it. But
Edward's not too happy with your lighter allocation.
No, I'm not too happy with my lighter allocation either. I think I mentioned I have a small spot bag, but I'd love to get my lighter exposure up.
Alrighty, well, we've got
But Arcus. Edward also says ETH is on a 2-year cycle, clearly, and we're at 4K very soon.
It's okay if you're invested in Dino coins, Rob. There's money there too, just not sexy to talk about it.
Talk about Dino coins. I think Andy's still full port into a publicly traded DAT vehicle, which
never.
We don't have to talk too much about. But
I'm in,
maybe
boys. I'm good. Don't you worry.
We exited. What does your portfolio look like?
Don't you worry, guys. I'm all in. I'm all in hype. All in hype per. A little bit of
there you go.
Arrow, Zcash, Near.
All in per.
Hype. Per. Dude, this has got Don't you guys worry. We are about to cook right now.
Publicly traded vehicles have got to be just the most dino of dinos.
Yikes. Don't worry. I'll see you at 20, 25.
I have an unhealthy amount of a pump bag.
Nice.
Steven is 90% ETH, 10% lit. Dude, there is ETH bulls in the chat. I would do pump over Solana even with the lawsuit.
Would you? I have an unhealthy.
I tend to agree with that. I just ethically, I find it a bit like of a moral quandary to look at Pump Fund and see the type of shenanigans that they have going on there, especially with like the most recent. You can pay people
now.
Pay people to do all kinds of things on Pump Fund, and
this guy's got
that's what we choose to allocate our capital to. I don't know.
It appears Jeff from Hype met with the SEC this week, just announced. Yeah, we just covered that. Breaking news on the Rollup. Sick transition. Epic. All right, guys, we've got Eddie Zhang, the founder of Arcus, going to join us. He's building a DEX on Robinhood chain. This is your chance to put your questions in the chat about what is going on Robinhood chain. If you guys recall, I had the chance to buy Cash Cat because I got sent it from an Arbitrum Growth team member at 40 mil. I did not buy it, but this is your chance to put your questions in the chat about what is happening on Robinhood chain. So let's get Eddie up. Let's get this started. Eddie, welcome to the show. Founder of Arcus. You're building a DEX on Robinhood chain, which has gotten a lot of attention the last several weeks, or really the last week. Would love to catch up, man. Good to have you.
Yeah, thanks so much for hosting me. Really excited to kind of talk about Robinhood chain and Arcus.
Do you own any Cash Cat, man?
I own some Cash Cat, not as much as maybe I could have owned. Also, I guess the anecdote there is, as a launch partner with Robinhood, we had access to the chain before kind of mainnet launch. And so I think if people have dug into Cash Cat, it was deployed a bit before. So it was deployed around like June 17th, which is curious, very curious. So we were doing kind of some forensics on the chain, and we did actually see it before it was launched.
Wow, that's pretty based. I saw it at 40 mil and did not buy.
I think it's worse for me, right?
I still have an aversion to memes. Like, why do I have such an aversion? I just have an aversion to moving right now. Like, I just have my core holdings, and I just don't want to add anything. I'm just cozy. Like, I don't know. Maybe I'm getting old.
Yeah. I think I feel that way. Before I was a part of DYDX and before we launched Arcus, I had a startup that did Solana trading. Mostly it was on meme coins, and we also did some perpetuals. And so I kind of lived through one cycle, and I think, maybe that also created a little hesitancy on my part for Robinhood chain.
Well, we've got an initial question, I think, to set the stage as to what's happening with Arcus and Robinhood chain, which is, what is the state of DYDX given this transition, whether it be the protocol, the token? What is happening to DYDX as a result of this rebrand to Arcus? The token of DYDX, the protocol, can you just give us an all comprehensive understanding of the state of affairs there?
Yeah, definitely. So the protocol is still fully functional. Trading is like fully operational. We're still doing, I think an average of like $100 million a day on DYDX V4. So the tokenomics are exactly the same as before. So 75% of fees are buying back the token, etc. So like the actual product is still fully functional. We also still ship any security changes, anything that we think is urgent for stability on the chain. We still monitor. I think what we were doing with Arcus makes a lot of sense under a few different lenses. One was that we did a substantial CEO transition for the business. And so as a part of the acquisition of my previous company by DYDX, I took over as CEO. And as a part of that, we also during 1010, I think realized that there was a lot of architectural changes that we maybe wished were possible. And that was I think the beginning. The reason why we committed and launched Arcus recently is, of course, the partnership with Robinhood, because we believe in both having stocks on chain and having perpetuals for stocks on chain. And so like the combination of the two, I think was like really compelling. That's like showing up today in like adoption numbers. So like stock trading, I think we're, I guess, taking a feather out of the Robinhood hat here. Stock trading is like fully free. And we also have like many more than I think is like anywhere else because we're able to provide liquidity there. Some of that's supported by Robinhood itself. And so that's been, I think, like the idea is having like a really good like free product that's easy to use, like spot, and then having a like more pro product like perpetuals on single name stocks, all backed by kind of Robinhood liquidity, which makes the experience like really good and allows us to kind of like rapidly list. And if you are kind of like a big size trader and you want to trade like a lot of size, then using Robinhood's rails, I think is arguably better than anything else out there. So that was, I think, in like a nutshell, the story, the strategy, kind of how we're focusing.
Very cool. Eddie, there's a thesis that Andy and I have been playing with on this show, and it's sort of borrowed from a thesis around stable coins. And if you don't mind, I'll just take a minute to explain it to you. And I'd love your critique and just tell us, are we thinking about this correctly? Does this, path make sense? So like I said, this originally originated around stable coins because consumer behavior is so ingrained. You go to coffee, tap your card, that's not going to change. And when we look at our bank balance, whether it's a merchant or a consumer, we don't see the loan balance sheet. We don't know if they're in 5-year treasuries, 10-year treasuries, right? Who has the mortgage? They just show us a number. And so on the stablecoin side, we've toyed around with this idea that, the banks have the ability to tokenize their deposits and really onboard into stable coins, right? I still just tap my card. The merchant just sees a number get bigger in their account. But behind the scenes, if banks want to settle in stable coins, they can choose to do so. And the merchant nor myself as the consumer has to change our behavior or, would really have any insight into whether stable coins are being used or not. Similarly, take, the Robinhood chain. Robinhood, like, a bank has all of these deposits. Robinhood has all of these, equities, right? And they are the holder of these equities, essentially the owner on behalf of their customers, right? Mm-hmm. My understanding is that, the shareholder deposit or the certificate of, shareholder ownership is held by Robinhood. If someone on Robinhood's platform buys and sells that that stock certificate to someone else on the Robinhood platform, the certificate, the shareholder certificate doesn't change hands. It still just stays in Robinhood. It's just in Robinhood's database ledger, the account ownership changes from one account to the other, right? So similarly, Robinhood could choose to tokenize all of the equities that it holds on behalf of its customers. And, unbeknownst to the customers, they could be trading, equities. To them, it doesn't look like it changes, but Robinhood could take it upon itself to just one click, migrate all of their equity holdings that they hold on behalf of customers over to a tokenized instance and, do with that what they will. Whether it's tokenized settlement 24/7, they can choose to do a variety of things once they've migrated all of their equity, stock certificates into a tokenized stock certificate. And customers never have to know or change their consumer behavior. Generally, what do you think? Like, is this do you think this is what the plan is? Do you have any understanding of how Robinhood is thinking about, migrating from a stock certificate world, physical stock certificate world into a tokenized one? Just would love your reaction.
Yeah. I mean, I think that I guess I don't want to speak too strongly for Robinhood itself, but I think my understanding is that Robinhood is famously a very consumer-centric platform. And that's, I think, why they're the most favored trading platform for many young people in America. I think what they're most interested in, and this is where we found a lot of alignment, is building value for consumers, because ultimately speaking, growth for the business is what people really care about, right? This is a classic problem I think a lot of people run into is I think CEOs are rewarded for growth, not cutting costs, even if ultimately speaking, they kind of result in the same profitability gain, right? On average. And so my opinion is that they're interested in expanding the user base internationally, and stocks, free stocks, access to American markets, the best performing asset class in the last 20 years, is pretty weak. And there's, maybe like in other countries, there's some platforms that offer like some version of free, but there's certainly no like dominant platform like Robinhood in America, right? And Robinhood's international like accounts is like substantial now. I think it's like around 1 million in the UK, which is their like biggest international market. I think they announced that during the last like live cast. But kind of expanding like massively to like many other international markets is like a big hurdle. And that would typically require like, call it like lots of like centralized licenses, lots of KYC, lots of all these things. And stock tokens is at this moment, I think now, where there's enough proof points around like some people wanting some of it that it makes really strong sense for Robinhood to like make an attempt at kind of acquiring lots of international like customers this way. And that's what I think is like maybe the most compelling thing. I think like the Rails answer is of course like really good for like a payments company, because like payments rails like have been like going down in like net cost over time, and like stablecoins accelerated that, which is like really good for the end user. I'm not quite sure the analogy on like the rails for like settlement, because as you I think broadly know, like for stock trades right now, like Robinhood actually gets paid to like, give the flow to like a market maker.
Yep.
So like it's the opposite arguably of like stablecoins, since instead of like the payment issuer paying money, they're getting paid themselves to direct the flow. And so there's not kind of, positive to negative spread.
Yeah. Another thing specifically on the perp side that is kind of aligned with this is, so right now Arcus is launching perps for Robinhood chain, and then Lighter also has their instance on there. Are you guys thinking about, is this just two separate offerings on the chain? Both of them have pretty low liquidity, very new, very fresh. How should we think about tokenization and perps holistically on Robinhood chain as it pertains to kind of the scope of this conversation?
Yeah, definitely. I think that I would say that we kind of focused on expanding the scope, which is why we launched with both like stocks and perps, like spot stock tokens and like perps. And the belief was that like acquiring users, acquiring traders was like the most defensible thing over like any long time horizon, and kind of like finding value for them is what we were trying to do. And so I think we've been a little bit more focused on like having like a big wedge on like the publicly available part of the product, which is like stock tokens, whereas perps is in like beta for this like reason. Like we want to make sure the product experience is like really good as we like let people in, and part of that's like liquidity, part of that's like the classic chicken and the egg problem, like getting market makers and getting users in like a cycle, so like people have like a good experience. And so I think that's like a little bit different. Of course, like I imagine it's obvious that we're competing for some of the same users. But I think we're competing like a little bit differently in like the tactics and the product offering. And I think that will probably increase in difference over time, as opposed to like compete more closely. I have a strong belief that a lot of the reason why people are excited about Robinhood Chain is the potential to kind of bring new people into crypto rails, and that stock tokens are like familiar to them. And that's like a great way to do it. And so that's why we were like really focused on like that part. Also, my background is primarily in consumer tech. And so like expanding the user base, kind of not always fighting for the same perp trader users, I think was a really big cornerstone of what we're trying to do.
Could you unpack sort of what the asset composition on Robinhood Chain looks like right now? Because, Vlad has gone on CNBC and talked about RWA tokenization, really, really great. But all that we've been hearing about on Twitter has been Cash Cat, right? So these two feel a little bit disconnected. We understand permissionless, deployments of meme coins, but the KYC and, maybe the stock tokens, as you call them, is a bit different of a path to scale. Could you, kind of unpack like what does the token asset composition look like right now on the chain, and where do you think this goes from, a balance point of view?
Yeah, definitely. So I think there's like a couple ways to look at it. Like one is like certainly like TVLs, and then one is certainly like volumes, right? That's I think like roughly what people would say is like the base case. So like on a TVL basis, I think it looks like not too dissimilar than what you would expect. Like on a TVL basis, there's like a lot of lending. So like Morpho is like the, like the big lending partner that was announced outside Robinhood. I think like on TVLs, they're like around 60%. That's pretty typical. If you like take them out, then it looks like a little bit more reasonable because once again, that's the same as like on base or like on many other kind of like L2s. Like lending is like the biggest use case on a TVL basis. Of the remaining TVL, I believe it's kind of like maybe 70% is like in Uniswap pools, and the remaining 30% is like on like stock tokens and trading platforms, roughly speaking. Of course, on a volume basis, the story is a little different because meme coin volumes and like prices attract a lot of attention. And I think there was, call it a nascent audience, like maybe from Solana, maybe from other kind of like meme coin traders broadly, that was like waiting to try something new and interesting. And so on a volumes basis, I think it's maybe closer to like 90-10. Which is not crazy because, of course, like meme coins have picked up like a lot. At a top line level, I believe Robinhood trading volumes are slightly bigger than base trading volumes and are about like 30 to 50% the size of Solana, something in that range. So those are kind of, I think, the mental model comparison points that I would use. Is I do believe, of course, that long term, I think RWAs will have like, call it like stable, consistent growth in usage and adoption. Something that you would maybe more, it's not like, I don't know, RWAs aren't going to, at least most stocks aren't going to like move suddenly up 10,000% suddenly down. And so they're like less exciting, but much more stable. And I would expect them to see continued growth. And then of course, kind of, I think trading volumes on things like memes would be like very volatile over time, depending on launches and, you know, like movement of capital between different L2s or from Solana, etc.
Yeah. So is there going to be a new Arcus token? Is that part of the plans, if you can talk about it, or is all of this just kind of directly tied into the DYDX token?
We've alluded to, as a part of the launch, because of the story that you kind of mentioned, because the story is more complicated, having like the company have both products in market, that there would be like an allocation of a future token for DYDX community holders. So like we've alluded to having one. So I think that's like mostly what I can share. We haven't finalized a ton of things beyond that. I think we wanted to kind of make sure we were focused on making the product really good, like making the user experience really good, making sure that we built something that was like really valuable for people.
Yeah, I love it. Last thing from me, Eddie. You know, we saw a lot of these perp platforms launch in the last 5 years, and we've kind of gone through these different implementations of them. And right now we've kind of set on Hyperliquid being like the de facto winner. What do you think led to Hyperliquid's what seems to be more of a staying power than the previous iteration of perp dexes, and what can you learn from that in this new iteration of Arcus?
I think there's like a lot of things Hyperliquid did well. I think it is a bit more like today, like there's maybe a focus more on what they did well and less on what they didn't do well, which every company kind of, as they grow and they build things, like iterate and make mistakes. And so I think what they did well was certainly the management of the airdrop was like really well done. Having like a very large portion for community members and not having like large holdings by, say, like single entities, whether that was like investors or founders, to kind of not create as big of an overhang of like concern about like price action. I think the other thing they did well was they did a really good job with shipping speed, which quite frankly, we're trying to do as well. Like, I think listening to people's feedback, like being really on top of the ball with like the assets people want as they want them, having the ability to have technological innovations so you can deliver those assets faster and sooner at like better liquidity and better prices. They did a lot of good job. They did a really good job with. So I would say, I think those are the two maybe like big things people typically highlight. I have like other opinions on like little things that they did along the way, but I think like the speed of iteration and the like airdrop structure are both recognized as being like really well done and maybe different than what other people have done.
And then do you think your proximity to Robinhood allows you to have like edge on the tokenized equity market? Like, is there some sort of like mechanism that allows you to like list faster or have better access, or like, is there anything like, is there any material advantage on that front being on Robinhood chain?
Yeah, I would definitely say that because we have investment from Robinhood and we have a partnership, we work really closely with the team on like design of things. And so you can see that kind of already apparent. It's why we have like many stock tokens that other platforms like might not have at launch, because we wanted to work like very closely on like a mechanism that could provide like liquidity quickly, even if it's not like available on chain when the users come. So as with any other nascent platform, like the goal is to deliver the best user experience. And because of the business that we're in, we have to take into account capital efficiency, right? So like maintaining inventory on chain for like 10,000 assets was not going to be like a great starter. You can't like kind of like force that through with like market makers. So we did some design around having like a token, stock token that delivers with like your price is guaranteed, but with like some settlement delay because we're basically issuing it out of like Robinhood's like backend. And so that was, I think, maybe not something that will stay in place for like a really long time, but I think it was really good to deliver like more availability, like 100 tokens instead of 25, which is what most other platforms have, which is why I think most people right now, most people are using our front end if they want to trade stock tokens.
Yeah. Well, that's really helpful insight to understand the tokenization, the path to tokenization for a lot of these equities. And so could you just unpack that a little bit further? Like, feel free to get as technical as you'd like, in terms of, there's pricing guarantees, as you mentioned, but there's a settlement delay. And so these things are still sort of in Robinhood custody, I'd imagine, but it means that you can choose to have less inventory of the equity on chain. So you don't need to tokenize as much. Can you just talk through some more of the mechanism here to understand how, you've currently gone about this listing, what that means for the tokenization? Do they need to be tokenized or can they stay equities? Yeah. Could you just, explain this a little bit further?
Yeah, definitely. So I think there's like a couple simple points. One is, of course, that in crypto blockchains, most of the liquidity exists where the liquidity is best, right? So like you don't go and trade like a Solana coin on like Base. So obviously most of the stock liquidity is in the New York Stock Exchange. So like off chain. And the problem was you're trying to create like a new pool, like call it like an on-chain pool of like NVIDIA stock and like US dollars. But that pool has to like constantly be rebalanced to like match like the actual price, right? And there was some innovation that was done well, I think, when it comes to like allowing prices to be streamed. And so that like helps like a little bit. The advantage there is, of course, you get immediate settlement. So like when you trade against that pool, you get immediate settlement, but there might be some like lag, right, between like the price correcting because the pool is not the definitive source of price truth, right? So what we did is basically for some tokens, if they don't exist on chain, say like, I don't want to like publicly name like a shitcoin stock, but just like a smaller stock, just like a smaller stock that might not be maintained. What happens is, of course, there's like a price feed coming off of like, Robinhood's backend. Effectively, that's like real price data from the New York
based
Stock
on
Exchange.
their order book.
Yes, exactly. And so like what happens is like we receive like an order from like a user, say like on Robinhood chain. We can lock in the price because we can see it, but like it takes some time for Robinhood's infrastructure to like actually issue the token. So what happens is we like tell the user the price, they get it.
So it's almost like tokenization on demand.
Yeah, it's similar to like an escrow contract in some ways. So like what happens is that like, like the user knows the amount they're getting. We give them, you can see it if you just use our front end, by the way. We have like a little column that says like settled and unsettled. And your price is locked in, but you might have like some unsettled for like a minute or two. Because that's about the amount of time it takes to like issue the token and settle. So what happens is price is guaranteed, but what's happened is the user's like US dollars, USDG in this case, is like an escrow, and then the market maker will deliver the token to receive their escrow. And so they've already
delivered this stock token.
Correct. So like what happens is that like the user puts the dollars in, they get like a wrapped, like call it like NVIDIA token. And then when the real NVIDIA token gets put in, then the market maker gets the US dollars out. And it's like a very simple escrow contract.
And is this like a permissionless liquidity provisioning ecosystem, or is there whitelisted market makers that have the ability to issue those tokens because they own the equity?
Yeah, so we wanted to kind of be safer. So right now it is like permissioned. We have the ability to maybe make it like permissionless like later. Part of the question was that the design was structured to optimize for user experience. Mm-hmm. And we didn't want to kind of have to deal with like a lot of like trust because the major caveat is if you don't like trust the market makers, then say like they've like agreed to this, and then 2 minutes pass, and for some reason the prices move like dramatically, then of course they could hypothetically, like take the difference. And we have like a trusted list that won't do that, which is why like this current system like works really well.
And so once it feels like it's, just in time tokenization. Like there's not like this broad swath of tokenized, like things you didn't, Robinhood didn't decide we're going to tokenize $100 million of like our most popular equities. It's like, no, we're going to be based on user demand. These things are going to put in the human users are going to put in orders. And when they put in those users in order to deliver their purchase order for an equity, we're going to tokenize that stock on demand and deliver that on chain. And so over time, we would anticipate that there's a greater and greater existence of stock tokens on chain, because there's really no, does this process work in reverse? Like when I want to sell an equity, does this tokenized stock get burned?
Reverse is immediate because like the stock already exists. So like there's no like risk, quote unquote, because like you're immediately getting, like the dollar amount on the other side. And so the reverse is like immediate for the user. It's a little delayed for the market maker, but like, of course they already have the token, nice stock, when they burn it. So like, there's no like risk on like the price side. And I would say that the major advantage, of course, is capital efficiency. So like now, like with the same $1 million, hypothetically, you can quote like an infinite number of names actually, versus like if you're trying to divide $1 million by like 10 tokens, now you can only maintain like 100K of each token. Obviously like as N scales, it gets worse.
Yeah. Very cool. Very interesting. Well, Eddie, I wish you the best of luck, man. It's going to be it's quite the mania going on there right now. So I'm sure that you're very busy and having fun. Hopefully, Cash Cat gets to $1 billion, brings the trenches back a bit there, Rob, for you. And thanks for spending some time with us, Eddie.
Great, thanks for hosting me, and great chatting with you guys. All right.
Yeah, good luck, man. Stoked on this. Cheers, man.
Thanks, Eddie.
So, Rob, I saw that there was a token that was, I think it was a meme coin that was paying out dividends every 15 minutes, ample fourth style. But they were paying out in all these different NVIDIA and Apple stocks on chain. I thought that was pretty cool. It's like a meme coin that is paying out NVIDIA stock every 15 minutes to the holders.
And the really cool thing about that, it's not, my understanding is that it's not an SPV wrapper 3-4 times.
No, it's just the stock.
Because it's Robinhood.
Yeah, it's pretty cool. It's pretty cool. Speaking of that, let's get into our daily equity of the day, guys. I don't think you did this quite yet, Rob, did you?
Don't believe so. I just want to say, Eddie was fantastic. Really, obviously, a DeFi native guy.
Yeah.
DYDX has struggled recently in the perp space. He said they were still doing, significant volume per day. But just in terms of understanding from an educational point of view, the way that Robinhood as a major financial institution in the equity space has gone about their tokenization journey, I think is incredibly thoughtful, right? Incredibly capital efficient, such that they've designed this mechanism where it is tokenization just in time on demand. They don't need to guess at which equities the community wants to trade most. They can go about it in a very methodical way. And I think this is going to end up paying dividends. Is going to end up making a lot of sense. And it's very cool to understand how this is playing out in practice. We've talked about tokenized equities.
He's not convinced. Edward says, I'm not convinced. Good luck. Hype and lit.
Edward, I think your bag bias is showing. Look, not even to say that, but
Edward.
Obviously this is mostly for spot assets because those are when you end up, actually settling the trade.
Triggered him hard.
But anyone, wouldn't this be just to be clear.
He's triggered, Edward. You got him.
Edward, I don't own DYDX, man. Like, let's just be extremely clear.
Edward, you got him.
I'm just speaking about the mechanism. Andy's been way off on like technical analysis land, like super like head in the clouds around all these tokens and like just really wanting the market conditions to turn around. I don't know if he remembers or you guys remember, but we were an educational channel. We used to have hour-long podcasts about blockchain and tokenization architecture. You know, there used to be some heart and soul before all the technical analysis.
I'm just trying to make the boys some money, you know? That's all I'm trying to do.
The astrology took over. So I don't have DYDX. I don't own DYDX. Well, you know, who knows? But the mechanism itself, I would imagine that anyone with spot listings of stock tokens or tokenized equities on Robinhood chain would have a similar mechanism. You know, that could be lighter, right? With spot asset listings that go and tokenize these stocks. It could be anyone, right? That goes and has these stock tokens listed, right? That uses this just-in-time tokenization on demand mechanism. So it's the mechanism that I enjoyed learning about.
I wonder what
as far as the
DYDX is
token, I have
doing.
zero clue on whether or not it will benefit as a result of the mechanism.
It honestly seems like they're just ditching it.
Yeah, it seemed like they were going to launch a new token, and DYDX was going to get like an airdrop. DYDX holders would get an airdrop of the new token.
Oh my gosh. Yeah, yikes, man.
Are you looking at the DYDX chart?
It topped out at $28 in 2021.
DYDX?
Yeah, it's at 12 cents.
Wait, I see.
Educational channels don't make money. Hey, buddy. Hey, new type. Buddy. I don't know.
New type.
I don't
We've
know.
been an educational channel.
I don't know which educational channels you've been looking at, buddy, but you'll get there one day, buddy. Just keep hanging on.
We survived the bear market for a reason.
Just keep hanging on, new type. You'll figure it out one day, buddy. Well, actually, you know what? I'm going to put you in timeout. There's a timeout on YouTube button. One more of those comments, new type. You're going in timeout, buddy. All right, let's get into the daily equity segment here. Morgan Stanley, robotics, and Barings as a core robotics play. Let's get it. Already, Morgan Stanley says that Barings is a picks and shovels equity trade on robotics, offering exposure without needing to pick the winners, which would be one of the Aptronics figure robo strategy type of plays. The report they put out reports 300x market growth by 2050 as Barings demand scales across humanoids, drones, autonomous vehicles, and industrial automation. Unlike software chips or robot form factors, Barings are required across nearly every motorized system, making the category more architectural agnostic. Again, not having to pick a single one. More complex robots need significantly more bearings, from 8 to 12 in small drones to upwards of 70 in humanoids, creating a direct unit growth tailwind for suppliers. Major manufacturers like NSK, NTN, SFK, Timken, and Schaefer control more than half of global supply, making them potential equity beneficiaries of robotics adoption. The robotics equity trade may extend beyond AI chips and humanoid manufacturers, and precision bearing suppliers could be an interesting category to invest in the robotics trade. As I said, it's a very consolidated market of suppliers and manufacturers for the global roller market, which is part of the bearings trade. And yeah, guys, I mean, we're now looking at the picks and shovels of the robotics trade. I think 3-4 years ago, robotics wasn't even on the mind of people, but it's very clearly become part of the investment landscape for people that are looking to invest in the AI physical trade. And so wanted to bring this to your attention as a potential long-term opportunity, robotics picks and shovels play.
I was at a wedding over the weekend. Someone asked what my 20-year time horizon was. And you guys remember I went on a 15-minute long rant about my 20-year time horizon. The thing that keeps coming up is robotics. When we think, 10 to 15 to 20 years out, you think AI, who knows what is happening in the AI space. It's moving so quickly now. It feels like it's peak acceleration right now.
Yes.
And so if you do get a deceleration force, I don't think that's necessarily bearish. I mean, people are calling, you could have a theory that, the deacceleration of the AI trade would, crash the whole market. I don't necessarily see it that way. I think you can accelerate through a lot of what's happening in the AI space and potentially see a rotation trade into, crypto in the near term, digital assets, but also robotics in the long term.
Yep.
Because you do have now this, this technology, this brain, this mind that is able to fuel further technological growth in the hardware space. So now, obviously, and so I was speaking with someone who's a data engineer for like a healthcare company, but had experimented in robotics. And he was talking about how it used to be the case that these movements for these robots, when they, take a step, that was hard coded. They would literally have to program in, right, like a command line interface. When this happens, then take a step with this velocity, with this length. All of that is programmed away and replaced with a probabilistic engine that is predicting how long should my stride be, how fast should it be. All of this is done now with LLM on the fly. So I think we're going to see the explosion of the robotic space. I think now is an absolutely tremendous time to get in early because we're only going to see more growth. The only thing that I think can stop this robotics train is going to be regulation, which obviously isn't something that we're going to deal with in any sort of innovative asset class. So you have to be paying attention to the regulators when it comes to robotics. But right now we are in this race with China because they have such a tremendous lead as it pertains to humanoids in particular, but robotics generally. So I think the US is going to really try to accelerate to catch that up. And I think, this is going to play out on a, 10 to 15 to 20 year time horizon. When it comes to the bearings trade, and the picks and shovels of what the robotics market needs in order for it to work, I can't help but think about the analogy of chips in the AI market. I think is analogous to bearings in the robotics market. So if I'm looking at this, I tend to look, when you have Morgan Stanley and these super large institutions calling, right? It almost feels too late, but I would make an exception in this case. I think this is still an extremely new, innovative industry. And bearings make sense, because they are instrumental in these pieces of hardware. That, I would take a flyer on a bearings index for sure.
Ladies and gentlemen, that's your daily equity robotics picks and shovels plays is here. We are now in the next iteration of the robotics trade. That wraps up our daily equity for today and brings us to the end of today's show. Rob, man, thank you for sharing your portfolio with us today.
My pleasure. I want to give a shout out to all the white ibises in the world. I've got one right here behind me.
There you go, man.
And the reason I'm shouting it out today is because this picture won't be here tomorrow. There's going to be a new picture. So guys.
Here we go, guys. Let's
W's in the chat. Tell me what picture I should get up there.
Guys, great show.
W's in the
You're a white ibis. Thank you.
We love you guys. It is hot as hell in the studio today. And the market's great. We were down bad yesterday and today we're so back. So what does that mean for tomorrow? I don't know.
Tune in tomorrow to find out.
I'd bet tomorrow's going to be a pretty neutral day if I had to bet. So, guys, this is it. You know where we stand. You know where we're at in the long-term cycle.
You know where to find us.
Are you at grandma's house? Little Miss Gunn says to you. Obviously in Florida. I'm glad you said that, Little Miss Gunn. I think he needs a little bit of that from the chat. W. Greg, W. Christian, W. Little Miss Gunn, W. New Type, Edward. Guys, hit the like button. It helps us a ton. Thanks for rocking with us. Thanks for being a part of the show. You know where to find us tomorrow, 12:30 p.m. Eastern, live from the financial capital of the world. Signing off. This has been Tuesday, July 14th show. The Rollup here. The future of finance is here. Thank you.